Uh, yeah. I think so, yeah. I joined it.
Masih dia like share.
Let's join. Let me see if it asks me. That's I do.
Yeah,
Yeah.
really.
You join?
This annoying. Let me take back the share. I think that will change.
I think yeah, the next step. Try to drive it first.
I go to
I guess we never said to do.
Those are actually going to be sure.
Take a chance, the
Yeah.
Joint thing of the see. Yeah, you seen it? Next. Oh, yeah. So you see it. Okay, but that's good. Okay, good. Yeah. All right, cool. See you too. All right, bye.
Damian, and these on too, right? They on, right? All right.
Yeah, and that's what I do.
I think it's 10 minutes now, right? All right, good morning, everybody. The mic is for our Zoom participants who should be logging on shortly, right? Just want to say thanks everybody for taking the time to come out this morning, by the traffic, finishing your shifts, and whatever you had going on in your personal lives. This is just one of our first of other initiatives that we'll be rolling out over the next year or two, aimed at the different pillars of our wellness. So, this is aimed around our financial wellness pillar that we will try and provide at least some ideas, some concepts, and some services and products from different parts of the financial market, aimed at providing you with options and ideas on how to secure that financial sort of wellness that we talk about. A hot topic that we've always been discussing amongst ourselves is the pension, how it works, who administers our pension, and so on. So today, we're going to kick off today's session with our pension fund being, I know the full context of the presentation will be, but the aim is to be try to just raise some awareness on what we're involved with and how the machinery provided supposed to work for us. And again, we look forward to healthy participation, everyone's attention, normal house rules, phones on silent, whatnot. You need to take a call, you step outside. And after the session, we will have other presenters lined up for the day, but feel free to have your private discussions, outside in the hallway or in the lounge area. So I just want to say again, thanks a lot for everyone, and we look forward to a fruitful day and an idea-inspiring day, and I hope it hits home with some of what your needs are as professionals, right? So thank you again, and thank you for presenters for coming on time.
Lampol Patel.
Look forward to your presentation. Again, we are speaking to the mic so that the Zoom persons could listen, right? So thank you very much. If anybody has any questions, we'll just pass on, right? How should yeah, I sent out. It should be on from Tiffany.
Okay, good morning, everyone. My name is Catherine Rock. I'm the Pension Administration Lead at Tata Life, and I will be doing the first part of this presentation, which deals with the pension plan and your benefits. So what we'll be going through today is your pension benefits, plan facts, membership, contributions, retirement benefits, your disability benefits, termination, death, and plan management, along with my colleague, Ms. Nicole Lawrence, who will go through the investment plan, portfolio asset mix, fund valuation, etc. So the plan facts is plan was effective November 1st, 1991. It is a defined benefit plan, which means that your benefits or your retirement benefits are based on the service in the plan and your salary, as well as an accrual factor. The current plan has about 50-something members and 20-something pensioners, over 20 pensioners. So to be eligible to join this plan, you have to be at least 18 years or up to 55 years. You should have worked in the company for 2 years before you were eligible to join the plan. And to join the plan, it is mandatory. To enroll on the plan, you would have known through your administration team, your enrollment form, a beneficiary form, whomever you name as your beneficiary, as well as the ID. Contributions. You currently contribute 6% of your basic wage. The company currently contributes 22% of your basic wage.
You have the lady number name? Yes.
Come on, get the mic. Come on, get the mic. You can just- No, I'll tell Tiffany come on to manage the mic.
Yeah. No,
Sorry, what up?
that's fine. Good morning. And all right, and the pensionable salary is known as your highest 1-year average annual basic, which is usually your last year of salary in the company. If you are, or if you would like to put in additional voluntary contributions, you can, but it is not matched by your employer. So retirement benefits. This particular plan, there's a twofold. Admin staff, their retirement age is 60 years. And pilots, your retirement age is 65 years. So at this point, your pension is calculated by 2% of your pensionable service, which is the time that you're in the plan, but not in the company, multiplied by your pensionable salary, which is again the last 12 months or the highest 12 months. An example, similar to what you would have seen in your membership booklet, if the pilot turned 65 on October 15th and has retired, the pensionable service amounted to 30 years. Average yearly salary over the last 10 years before retirement was 120,000. His pension options will be 2% by the 30 years by 120,000, which equals to the 6,000 per month, or a tax-free cash lump sum of 150,000, and 75% of it will be a reduced pension, $4,500 per month. It's payable on November 1st, as his birth date was October 15th, and the guarantee period is 10 years after the first payment. So in this case, October 31st, 2034. Sure.
If you have a question, just ask for the mic, right? Just leave it over there. No, that's for the people online. You have a question coming up. Basically, we can hear you, but if you talk, the person online, thank you, Mark.
So
Yeah, understand? I'm next.
So the accrual rate of this plan is 2%. So your calculation would be 2% of the last year's service, 120,000. That's the last 12 months by the amount of years, 30 years. And that will equate to $6,000 per month, or 72,000 per annum, 150,000, which is a tax-free cash lump sum. Or, well, that's the other option that you have. And if you take the option of the tax-free cash lump sum, you get a reduced pension, which is 75% of your normal retirement pension. So that would be $4,500. It is to note that this is capped at 2/3 of your annual salary. So if your salary happens to calculate a pension above that amount, so let's just say it was 7,500, but the cap of the 2/3 was 6,000, you will get 6,000, and that is by law. Yeah. Early retirement. This plan allows you to early retire from as early as 50 years, but if you retire between the ages of Sorry, that was. Oh, so if someone wants to retire between the ages of 50 to 54, you have that option, but your pension will be reduced on account of early retirement. You can opt to just defer the pension until normal retirement if you choose.
Every day and every day you travel. There's children. But you say, if I miss out anything, I will come back to get the passport to them. She tried to write it. But she went on talk to she now. So she all right.
Approaching the
Yeah,
subject of
right.
early retirement.
And he don't consider them thing. Never work no way. You tell me if she asks.
Hi, can people on Zoom mute your mics, please?
Tell me then. She asked me her name.
Guys, can you all check your mics, please?
She will watch me and she laughing. So Brendan talk to she.
Okay, yes. Sorry, a question?
Morning again. You mentioned earlier that we can put additional contributions towards our pension plan.
Mhm.
So let's say for a younger pilot who wishes to do that and is looking to retire, we don't wish to work up until 65.
Mhm.
Do these additional contributions go towards maximizing the return so I don't have to work 33 and a third years
Yes, it does.
and I still get the 2/3 salary?
Yes, it does. So that is a request that you can make through your administration department first to calculate how much you will have to put in.
So
order to make
I
the
can say,
maximum.
how much do I have to go to 50, 55, 60 to receive the
You
full?
can. Yes.
Excellent, thank you. I'm not coming for
All right. So yes, so between 50 to 54. So between 50 to 54, you have the option to early retire, but it will be reduced. However, if you decide to retire from age 55, your pension will not be reduced on account of early retirement. If you decide, as at that time, yes, it would not be reduced. It will just be using the service that you would have done up to. Yes, in that case. Late retirement. So you can retire from this plan up to 5 years beyond your normal retirement date, but as at age 65, your contributions would cease. And then you just continue working. And then when you're ready, you come in and we will prepare your late retirement options. Of course, it will be actuarially increased due to the fact that you're accessing the benefit later. Ill health retirement. Unfortunately, if someone gets sick and you have been working in the plan or you have been a member of the plan for more than 5 years, you have the option of getting a disability pension, but you of course must undergo medical exams by a trustee appointed physician. And the pension starts on the first day after your ill health retirement. However, if you fallen ill and you're in the plan for less than 5 years, you do not have the option of a ill health or a disability pension. You'll only get a refund of your contributions, your pension contributions.
Sorry.
That's fine.
Thank you very much.
Yes, ma'am. Sorry about that again. That disability pension, how is it? I know it's prorated. How is it calculated?
It's
What
calculated
percentage?
Similarly to early retirement or normal retirement benefit, the 2% by your salary at the time, it's not going to be actuarially reduced. Oh, sorry, it is going to be actuarially reduced due to account. Sorry, apologies. It is actually reduced to early retirement to an account of earlier payment.
Okay, just for clarity,
Mhm.
using the same figures as before, what would it, could you just give me an
Well,
example, please?
it depends because how close you are to retirement, the factor or the actuarial factor that we use to calculate will be different. So the closer you are to retirement, to your normal retirement, the reduction will be a lot less. Versus if you were to early retire at 35, that's a 30-year difference. So it will be reduced a significant sum. And again, it's dependent on what the actuary advises.
As a rule of thumb, you lose about 7 or 8% of your pension.
Sorry. Yeah, you lose about 7 or 8% of your pension for each year you take it early. So if you're 2 years before your retirement date, you lose about 14% of your pension.
Before retirement.
Yeah.
Hi. Sorry, you're talking about late retirement. That's late meaning more than 33 and a third in the plan.
Oh, for
Or,
65,
So at 33 and a third years in the plan, you're fully paid up in the plan.
yes.
And if you retire at that point, you
Then,
get your full 2/3 of whatever salary you're on at that time.
okay, so if it is yours 33 and a third, but let's just say you worked from 30 to, let's just say 19 to 60 something. It would, let me make sure my calculation's right, actually 50 something. Depending on the early retirement times, if it is 50 to 54, it will still be,
No, but yeah, so
Reduce, but-
realistically, because we have a 24-year age limit for coming in, so it'll be over 55.
right, then yes,
So you're over 55, you're done 33 and a third.
it will be capped at the,
And you retire at that stage
it will be capped at the
before
2/3.
65. So let's say 63, you retire.
Mhm.
I don't know, I'm not picking on you. Let's say you retired 63 with 33 and a third service in the plan.
Mhm.
You're gonna get the full 2/3
Yes,
of your current or your highest 1 year
Yes.
annual average salary.
but of course, it will be less than if it is you to work until 65, because if your salary increases between that time.
Yeah, but
that
only if
is-
there's an
Yes.
increase in salary
Yes,
between
only if there's-
63 and 65.
Correct.
So you get that.
Would the advice be to the company to still contribute if that person passed that? Or put-
Yes, because the intention of the plan is for you to retire at 65, so contributions, the investments is taken into consideration that they're expecting the person to retire at
But
65.
it could be an expectation from that person to see or to assume that their contributions don't make sense anymore. There could be that argument developing. If you think about it, you paid up, you finish your term of your pension contribution.
That's an excellent point, but you have to remember that from this pension plan, you're not only building up pension benefits, you also get death benefits, you also get other benefits that need to be paid for somehow, okay? So that's normally why, even though you've capped out at your 33 years, the company still continues to contribute because you have other benefits to
If
pay
we
for.
could sum that up is that even though your individual portfolio is done, you are moving part in a bigger piece of machinery and your contributions still matter. So I just preloading some questions we might be getting in the future, right? So that even though on an individual personal note, you're paid up, you finish pay your contributions, your stuff in order, but you're still part of a moving piece of machinery, and we still need you in that contributing to the greater pool, right? That more or less sounds like it. All right, thank you.
JP? Tyrell here. Can I just ask a quick question?
Yeah, sure, go ahead.
Right. Just to clarify something. If I am correct, even after you pay up the 33 and a half years of payments and you are still working and making contributions, at retirement, those contributions in excess of 33 and a half years come back to you as an extra payment anyway, right? Plus the interest that was generated on those payments.
No, it does not. The only time that you
Because
get
you've
back a refund is your
overpaid, technically you've overpaid into the plan.
Well, that's what he's saying, it's not overpaying,
Mhm.
all right?
No,
Overpaying.
but
to
your
personal-
contributions, not the
your personal
company's
benefit.
contributions. No, I'm talking
Well,
about
to your
your
personal
personal
benefit,
contributions.
him overpaying, but for the functionary, the pension as a piece of machinery, it still needs the contributions to keep going. In the case of somebody else, remember, not everybody, but let's not, well, that's what I'm saying, because, yeah, company contributions are talking about, guys, they're talking about from the company side. Because it's not unreasonable for someone to ask, if I've paid up in my pension, why the money can't come directly to me? It's not unreasonable. Someone may have that concept. And what we're trying to just lay out here is that, yes, we understand where that request may come from, but I'm telling you now is that it may not be available to you because it's part of a bigger machinery, right? So I just want to.
Oh, yes, I totally agree with that. No, I was only speaking towards your personal contributions that come out of your salary,
yes,
not
sorry,
the
so yes.
company's contributions as
I'm
well.
talking from the company side, yes, correct. So yes, for the personal side could stop, I assume.
No,
Not even
I think the
after?
personal contributions come back to you because I was looking at actually my statement yesterday and it shows there's something in the statement about that. I could not be totally sure, but I think
Yeah,
any
okay,
extra
so
payment you make on your personal side could come back to you as a lump sum beyond the
Yeah,
33.5 years.
that's an excellent point. Now, in my experience, the way these things were designed, I mean, this was an inequity. Look, I've capped out on my years service. Why are my personal contributions not come back to me? Okay, well, two things. If the contributions are optional, i.e. additional voluntary, you will get those back if you've overpaid. However, because of the nature of this pension plan where your pension is based on a service and your salary, your contribution is not considered a contribution to the benefit. It's considered a membership fee. To be a member of this pension plan, to get a pension, death benefits, ill health benefits, you have a membership fee to pay, okay, and they're not related to your benefits, i.e. when your benefits cap out, you still have to pay a membership fee to be part of this pension plan as a group arrangement.
Thank you for clarifying that. Makes sense. Okay, thank you. And I was actually it is listed under optional payments. Thank you. That's all I need.
We'll take one more on the topic for now.
I hear you, sir, but I'm a little confused. What if I decide, listen, I joined the service early and I have done my 33 1/3 mandatory years service. I have optional contributions, blah, blah, blah. So I am now at the max, right? Why should and I'm 63, 62, whatever. So I have 2 or 3 more years to go. I hear you saying, but I'm a member. But really and truly, if I stop paying at that point in time, it does not affect my pension, does it? And how does it adversely affect the group pension? I don't understand how that affects the group pension.
Okay. Okay. So guys, so as I said, there are two types of arrangement. There's the one where you have an individual personal pot where they build up money. That's a new type of arrangement, money purchase. But this is a defined benefit, okay? And when I say it's a defined benefit, it's a group, okay? Okay. Consider somebody far away from retirement, okay? And consider somebody 2 years away from retirement. Each one is earning another year of pension, okay? However, because of their proximity to retirement, the one paying for many, many years to come and the one paying for just the next 2 years, the cost individually will be much different. Agreed? Okay. But the way how these pension plans are operated and funded, we look at the average costs across the entire group. So even though my benefit may individually cost 7%, the company still pays 22%. And even though my benefit maybe costs 45% because I'm so close away from retirement, the company still pays 22%, okay? And another part of the accumulation of this as a single, well, okay, Joe Bloggs is reaching 33 years, but according to this rule, he still has to contribute even though he's not going to build up any more pension. So yes, he may be overfunding, for want of a better expression, but that overfunding reduces the cost of the overall arrangement, which is taken into account when the actuary does his calculation to come up with that 22%. So that 22% is a costing across the entire piece, taking into account that you think you're over-contributing. Now, if you stopped contributing, or if you change the rules that, yes, it's fair for you to say at 33 years, yeah, you're stopping people making personal contributions, which is fair. Don't get me wrong. I think that's fair. It's a good way to present it. But then the 22% will go up. Yeah. So that's one of the reasons that may be that they say, well, okay, well, we don't want the 22% to go up. So we'll continue to let people contribute after they reach 33 years. It's a design flaw in some instances, but it's a part of a plan that was probably thought about when this thing was being designed.
One question now, I just want to really everybody thinking it, is that sort of just in going straight, is that, sorry, sorry, is that a Tattle specific thing or is
No.
it an industry?
No, that is not in the industry in Trinidad. I have worked 35 years across the UK, across Trinidad, yeah. Trinidad pension plans are designed on the UK design, and this thing is a worldwide thing, okay? Yeah, now.
Come and tell me about different
Now,
pension plans.
Now, this interaction, I love this interaction because without this interaction, members of pension plans will not value their benefits. So if you think that you really feel strongly that people, when they've finished 33 years, you make a representation to the Pilots Association that this is not right, people should stop contribution of 33 years, the association may take it into consideration, make a representation, and who knows, it might increase the thing from 22% to 22.1%, and the association might think, well, okay, for that extra 0.1%, it's worth the members considering this a valuable part of their remuneration, so we'll change the rules.
Okay.
Yeah.
So I hear what you're saying, but I really do, I wish to not to
Okay.
agree with you, to differ a
Okay,
bit.
okay, well, let me
no, let me
okay,
tell you why.
yeah.
Because I came in early and I made my contributions to the 23rd years or whatever, and I did all that I was supposed to do, right? So I'm now eligible to my maximum pension. And I decided, listen, because I've maxed it out, this extra money that I was contributing, I can use it for medical, that time, or some other investment or whatever, because there's nothing more I can do. I have done I have fulfilled my obligation to you and to the company. So I stop. So there should be no penalties, because if I say, listen, give me my pension now, you have to give me my pension, right? It's not early, that's the arrangement. So if I decide to, okay, I still have a year or two to work and I'm not contributing, that should not impact on the body.
We're just gonna take about some more questions.
Matthew. So, Matthew, just-
Yes, no, yes. Yes.
Matthew. Commander one,
Yes.
just as a counterpoint to what you're saying, I understand what you're saying, but that's why I was asking the question from a different perspective, was when I have reached 33 and a third, I can retire with my full pension at that salary. So that is now a choice for you. If you want to continue to work, then you have to pay your 6%. If you want to take your retirement, you can take your full retirement and not contribute anymore. So those are the options that you have as a member of the plan. If you want to continue as a member, you have to pay your 6%. If you want to say at 33 and a third years, which is why I asked the question, at 33 and a third years, if I have another 2 years to work or whatever, I can retire 2 years before 65 with my full pension at that salary. So that is how you don't contribute anymore to the plan.
But Jimmy, can I come out of the plan and continue looking at the pilot?
But that was gonna actually get to after, but I mean, that'll be a segue, but
Okay, Ricky, just to clarify for everybody here, this is a matter has been looked at by the trustees. And there is something in the works. It's not signed off yet, but we're looking at reducing the 6% for people who have reached the 33 and a third, right? It is in the works, and it takes time.
all right, so thanks very much for a very insightful discussion. We love the topic. We're gonna package this and ready and try and flesh this out completely, right? So thank you very much. Let's go on. All right, so we're on the ill health retirement, Emmanuel.
All right, so termination of benefits. Now, most pilots don't leave until retirement, but it's just something to note. If you decide that before 5 years of service, If you decide to leave, you are only eligible to get your contributions with interest. If you took AVCs, that also includes your AVCs with interest. And it's subject to 25% government tax. If you are in the plan for more than 5 years, you can opt for the refund of your contributions. However, it has to get BIR approval. What BIR will do, they will check to make sure that you are not owing. If you're owing taxes, they have the opportunity or the ability to take it out of your pension refund. Or you can leave the funds in the plan and access it at deferred, well, at retirement age, early or normal or late.
Again, just very important for individuals filing their individual returns every year. If they don't, they could always catch it on the back end here.
Mhm.
All right, so just those who know, I just want to just make that clear to everybody.
You can also opt to transfer the value of your pension to another approved pension plan if it is you start to work somewhere else and they offer a pension plan, and that plan also allows for transfers in. If they don't allow for transfers in, by extension, we won't be able to facilitate. Death benefits. So there are 3 types of death benefits: death in service, death in deferment, and death in retirement. So if you were to pass before your normal retirement date, remember your contributions with interest up until the date of death, it's payable to your spouse or your nominated beneficiaries. If your beneficiaries are under the age of 18, we will hold it in trust until we are able to pay them at the age of 18 or later. If your spouse is listed, they also have an option. Instead of taking your members' contributions with interest, the calculation that you would have gotten for your pension as at the date of death, 50% as a spouse's pension. And that is payable to them until they pass away or they remarry.
And mom, just to remind you guys, we went through an exercise, I think 2 or 3 years ago, where we had to call around everybody to make sure that they put that beneficiary. That's something that every couple of years, we'll probably go around the room and ask the question, does it need updating? Does it need revision? All right, so just always keep that in mind. Ask yourself, did I do it last time? If not, we'll provide another opportunity to make sure you have the beneficiaries labeled, right? Thank you.
If you,
Enhancing that point, just from a practical experience, people at pension plans will be managed where people don't list a person to receive a death benefit. When a person dies in that situation, any beneficiary has to apply through letters of administration. And currently, those letters of administration take 5 to 6 years. 5 to 6 years to be processed. So something that will take you 15 seconds to sign a form will prevent your beneficiaries taking 5 to 6 years to get their money. Just want to make that quite clear.
and also to note, if you have a spouse and you have separated legal, well, what separation does not mean that they don't get access to the spouse's benefit, only in the form of divorce when they would not be able to get the spouse's benefit. But if you still have them as a beneficiary, they have the option to get the member's contribution with interest if you were to pass away. So if there's anything that you need to take into consideration, any change in relationships, etc., you should use that opportunity to make changes to your beneficiaries. Death and deferment. Similarly to death in service, if you pass away, you selected a deferred pension to receive at retirement age, and you pass before you're able to access it, the spouse or nominated beneficiary will receive the member's contributions with interest up until date of death. Spouse's pension at this point is not an option. Death and retirement within guarantee period. So the guarantee period within this plan is 10 years. So if you were to pass away within the first 10 years of receiving your benefit, your retirement benefit, your nominated beneficiary will receive the same pension that you were receiving as their source of income up until the end of the 10-year period. If your beneficiary is also your spouse, they receive up to 50% as a spouse's pension after the 10 years until they pass or remarry. About half, yes. 50% of your full pension. So if it is you choose to reduce, it will be 2/3.
And not to put any pressure on remembering stuff, guys, we will have a tab on the website with all the presentations from today, if anybody needs to go through them after. Right? So,
yes. legally married or common law, and by law, common law is 5 years. Sagicor says 2, NIB says 3, but we go by law.
Here's 2,
And of course, they will have to provide proof of common law relationship, bills in both of the names in the same address, at least 5 years also, or 2 affidavits from known persons in the community attesting to the relationship. To note, yes, sorry. After you receive
So I
your,
retired 65.
right,
I go to over 75. You said it's
you
guaranteed.
get the
for 10 years.
pension until you pass. It doesn't change the
okay.
pension to you. Once it's being paid to you, that amount does not change. Yes, only when you die, and if your spouse is, you have a spouse, they will get a 50% pension after the 10 years. And just to note, for if your spouse is much younger, it will be actuarially
10 years.
adjusted to suit.
Or you get the full amount.
If after 10 years, then only your spouse will receive.
No, what about you as a pensioner?
Mhm.
You get paid until death.
Yes, you get paid until death. 85, 95, you live to 120, your pension will continue.
Pilots don't live that long. A cool 87 is what we're looking for.
So it's just because of how the plan has been made, they put the plan rules that the guarantee period. So if it is something was to happen to you within that time, whoever you have as your beneficiary can access or gain from that.
Yeah.
So that's where they get the pension payments. So if you pass away at 70, they have 5 years worth of payments to still receive. Well, if it is, and also to note, if you name somebody that is your spouse, that is not your spouse as a beneficiary, they will be the person getting the beneficiary payments, and then the spouse will come in after and get spouse's pension.
Let's keep moving, guys. We have time,
Right.
yeah.
So plan management. So to note that this plan is governed by the central bank and the rules are approved by the Board of Inland Revenue. All queries that you have can be passed through your administration department. And we are the administrators of this pension plan with assistance from the investment advisor and some merchant bank, who will now present on the investments.
Thank you very much. So you have something else to talk about?
No. She has it on.
She has it, yeah?
Yeah. Shift this around. Okay, good morning, everyone.
Morning.
Nice to be here today. Thank you for having us. I am part of the Anson Merchant Bank team. My name is Nicole Lawrence. I am the portfolio manager of your pension plan, along with Mr. Sean Achong, who is our senior manager of investments, and Ms. Chanel Dyer, who is our associate portfolio manager on the fund. Now, this morning, I'm going to try to take you all through a few overarching points that we usually take the trustees through on a quarterly basis. A lot of what I want to kind of take you through very briefly. I won't go into extreme detail. I know we have a time limit, but a lot of what I want to show you is like the asset base in the fund right now for the last 5 years and the 5-year period that we have on hand. Currently, the fund is around 78% invested in TT assets by currency and 21.3% invested in US assets. Now, this is a very critical thing that you need to understand about the Insurance Act and the plan, in the sense of you have to maintain 70% of your assets. The trustees will be very familiar with this in Trinidad and Tobago domiciled investment securities, meaning that the asset has to originate in Trinidad and Tobago, right? So we do have a limiting constraint with regard to that, and I'll get into more detail as we go on. But the critical parts I want you to see here over the last 5 years is how the plan has changed and grown. So you had about $112 million in the plan in 2020, and now you have $132 million in the plan as of July 2024 this year. So that's about like just roughly about 18% increase in assets. But in your US side, you will see a much larger jump in your asset base here. given that you're seeing about 3 million US to now 5.3 million US, that roughly translates to 21 and 35 million US, TT dollars, sorry, in your US composition in the account right now. Now, your US assets are going to always generate a more attractive return. I think a lot of you are familiar with this if you have personal investments or personal portfolios. So given that, you know, we've been trying to maximize this portion of your fund. And looking, yes.
With respect to the 70-30 ratio
Correct.
and the US amount, are we maxed out as much or is there some cap for us to still?
Yeah.
Should we be focusing from our management point to inject more US?
Right. So I have two things for that. Give me the next. Right. So in the last 5-year period, you will see about, I think it's about 5% increase in US, 5.8 around there, right? So this has now moved from 18.8 to 24.6. Now, this is by domicile. This is what you can legally have. And the maximum is 30%. I have some good news that the trustees will be very happy to hear that we are looking at acquiring about 500,000 US tomorrow for you all to inject into your plan and to take some of your TT dollars. Yes.
And you can tell them that was my doing. I don't want to say anything, but I mean.
Yeah, so.
Behind the
right?
scenes, we were doing something.
So that's gonna give you all another 2% boost on the plan. So we want to end at least the first quarter. Yes, you record, you can record. Yes. You know, you can hold me to it. It's coming tomorrow.
But in terms of our allocation in that 30%, there's still room for us to
Right,
put
yeah,
in some
exactly.
more.
So you will have another 3%, but if you want to continue to contribute US into the plan, even if we reach that 30% limit, there is a way to slightly circumvent the rule in that you invest in US Trinidad and Tobago domicile assets, right? So Triton people, right? That lives on the New York Stock Exchange. So basically, in essence, once you cross that, so if you were to maximize and the US assets continue to grow past that 30%, we will make sure that you stay in US dollars and not convert back into TT dollars. We ensure that that is something standard in our plans because we want to maximize where your return is really coming from and being generated from. Of course,
Sorry.
when the TT assets continue to grow.
So
Sorry,
how does
go ahead.
that, so when we do get to a stage where, let's for easy numbers, $100 million, 70-30, US and 30,
Mhm.
and we don't do anything, and the US side increases in investment, that changes the ratio. So we might, without doing anything to the plan, end up at 72%. Are we not
No,
required
so
by law?
68. So 68, right? So
Sorry,
yeah.
32%.
Right,
in
so
US.
by law, it's by domicile, not currency. So because this is, you see how I have my chart up here saying domicile? So it's where the asset originates. So Triton paper originates in Trinidad and Tobago. It's just US dollar Trinidad and Tobago paper. So we will still invest in US dollars, but it will be okay to do that because it's domicile and originates in Trinidad and Tobago. So it will still meet the compliance requirements.
But apart from that, if with the other US assets, if the other US assets increase in value
Mhm.
and that pushes us over the 30%,
Right.
will we be required to divest some of those US assets?
No, what we will do is convert that to cash and buy Triton. So US cash and buy Triton again.
Okay,
So
all right.
that's how we treat with
Thank
that
you.
at any point in time. So you
But
will
we will-
always stay in the compliant
But-
requirements.
If Apple runs up, and we
Doesn't
have to sell
matter.
Apple and buy Triton.
Well, we won't sell Apple. Maybe we'll
Well,
sell,
if I said
maybe we'll
something
sell
else, I'm
something
just,
else.
just
Yeah,
saying.
yeah.
Okay, all right, I understand that.
Yeah, correct. Okay, yeah. So, right. So given the time constraints, I've kind of touched on this a bit and given you a little surprise today. Switch to you next to me. Right. Now, this is the fund valuation of the plan, right? So the fund valuation on the plan, this is again going to show you a 10-year period on the plan. So where you would have started in 2015, well, not started, but this is what I have for a 10-year period here. You had about 87 million in TT assets, and now you're sitting at, again, 132. You had US assets that were about 7 million, again, you're at 35 million. So in terms of your asset growth overall from 94 million to 168 million, in total assets of the plan, that's about 80%, just under 80% increase in the plan's assets over the last 10 years, which we consider relatively favorable. Of course, you would note that the accrued ongoing liabilities is continuing to increase, right? And given this is a DB plan, that's gonna obviously continue, which is lending to what they were talking about earlier about contributions into the plan, which is critical, right? So that's the sad side of the story this morning. But again, the assets have been performing very favorably over the last 10-year period. Now, I know you will see on the year-to-date returns, how we look in terms of TT returns. You see your TT returns have been performing relatively stable up until about 2023 and 2024, where you would have seen a slight detraction in the plan. Now, that is because of local equity. Single-handedly, the only asset class that we have that underperforms currently in the portfolio. Now, if I was to tell you that your US plan continues to aggressively outperform all the benchmarks, you still are constrained by the fact that we can only put 30, how much US we have to really get that outperformance into the plan. So again, this is why we lend back to the contributions into the plan, so we can kind of maximize and convert as much as we can to max out your US component. Because right now what we're doing is to get that 500,000 is maxing out the cash we have in the plan.
Can I ask a question?
Absolutely.
Yeah. Good morning, everyone.
Good morning.
Morning, Rick.
Yeah, okay, so what I want to find out is, right, I mean, I understand what you're saying about the distribution between US and TT and where it's domiciled makes perfect sense. I think it would be in our interest to domicile as much of our local investments in US dollars, because TriTop is only one thing you could invest in. There are many other US dollar stuff that's available coming out of Trinidad. But my question is, right, suppose, I mean, I'm going to be retiring in a couple of weeks, and I'm taking early retirement. And what I'm wondering is that, let's say 5 years down the road or 10 years down the road, there's a devaluation in the TT dollar currency. Now, a significant portion of our income that we're deriving from our pension would be from our US dollar investments, whether it be in foreign or whether it be originating locally. And if the TT component gets devalued and the government changes the rate to 10 to 1 or whatever, right? It means to say that the pension will be doing much better in terms of the income coming from the US dollar investments, right? So for people who are retired, who are now going to be suffering from a loss of income because of the devaluation, is there any provision where, because now you have the US component, there may be a revision in the pension to compensate for that?
Let me see if I understand your question correctly. You want to know if there's like a form where we could be paying US dollars out to the pension plan? I'm trying to gauge what exactly you're asking.
It doesn't necessarily have to be in US dollars, right? But okay, the pension plan generates income from its investments.
Correct.
Right? And
yes.
Part of the income that the pension plan generates is in US dollars because we have US dollar investments.
Mm-hmm.
Right? And the income that is generated in US dollars is what we're going to be using to pay pensions for people who are getting a pension.
Mm-hmm.
So what I'm saying is, suppose 5 years down the road, the government decides to devalue the TT dollar currency. It means to say that the amount of, if you look at what we're getting in US dollars now, at the new exchange rate, it means to say that we'd be getting a lot more TT dollars for the same amount of US dollars. But for the pensioners who are already on a fixed pension, they would be losing because now the TT dollars they're getting is devalued.
Mm-hmm.
So what I'm wondering, is there any provision whereby the pension plan, because it's earning US dollars, can help make up for that for existing pensioners?
Nicole,
And you can
Nicole,
make
could
up for it by paying them part in US dollars, or you can make up for it by paying a bigger amount of TT dollars.
Rick,
okay.
let's try and get an answer out because we're wrapping up this session here now. I don't know if
Right. Okay,
answer.
I'll have a go at that, okay? Okay, so the way this pension plan was set up, okay, is I can't stress more that it's a defined benefit arrangement where the company has promised to pay you a pension for the rest of your life based on a formula that's linked to your service and your salary, okay? Now, how the company meets that promise, it's up to them, okay? So I'm hearing you that yes, if there's a devaluation and yes, the US portion of the portfolio sort of starts to yield more, okay, the company should have more money to sort of pay pensions. But at the same time, what if there's a revaluation? What if there's a drop in the markets? If there's a drop in the market, do you expect that the company to cut your pension? It's a two-edged side sword, which the company has said, you just pay 6%, and whatever happens over the next 80 to 100 years, we'll pick up the balance. It's a balance of cost arrangement where your cost is fixed, your pension is fixed, but the company is on the hook to find the money from hell or high water. So that's the arrangement that's normally in place, that even though there's a revaluation or devaluation in the Trinidad and Tobago dollar, your pension stays fixed. Because on the other side of the coin, if it goes the other way, the company is not going to touch your pension. You are entitled to a pension according to the trustee rules, and you're going to get that come hell or high water, or unless the association falls. Once they are in place, you're going to get your pension no matter what, because that's what they've contracted to.
Okay, well, first of all, I wasn't trying to make a case for anything. I was just asking a question if there's any provision for that. And I guess from what you're saying, there is no provision for that.
I don't think there's any provision, Rick, from what I get in, to hedge on that variable, basically. All right, but again, the whole concept of today's session today is to show and raise awareness on multiple vehicles of investments for exactly this reason, so that when something goes wrong as drastic as a devaluation, that we're not only just relying on a pension and that we have other pieces and other financial instruments working for us. But guys, we want to wrap up this session after this slide, and
I know we push for time, but I feel that I should make a contribution here in terms of Rick's question. Rick, at the end of the day, what we have is a TT denominated plan, as quite eloquently explained earlier. But at the end of the day, the trustees have the ability to increase someone's pension. So let's say we suffer a massive devaluation, the fund is doing well, we're getting US returns, the trustees from time to time meet and we evaluate everyone's pension. And there have been cases in the past where we've increased pensioners' benefits. So I'll just let you know that.
Well,
Thank
Joel, that's an excellent answer, because
okay, Rick, I just want to get
you're
through this
telling me
last
that
slide.
there is a mechanism whereby pensions may be adjusted depending on devaluations and how well the US portion of the portfolio is doing. And maybe it's something that the association can actively look at.
Yeah, so what we will try and do is we'll work out a disaster plan, basically, a what if scenario, and probably down the road we could look at what options are available for us in terms of COVID-25 coming, or devaluation, or World War III. So we should at least have some sort of what happens if we have another global economy crash, and I think it's prudent that we look in that direction. But guys, for the interest of time, I would like the presenters. Yeah, okay, sorry, go ahead.
Are there any limitations on who could be identified as your beneficiary?
Yeah.
Are there any limitations on who could be listed as a beneficiary?
There is no limitation at all. You can put anyone, but I would say if you are putting a minor, please put a trustee. If not, then we will have to hold the funds until. And of course, you'll need to let them know, because most times there are persons that aren't aware that they are a beneficiary, and then there's just money waiting to be paid out.
Perfect. All right, we're gonna go with this last slide here, guys. Just bear with us. All right.
Yeah. Sorry. Okay. So I'm gonna go quickly, right? So just for an idea, this is just a graphical representation of how your assets have performed again over the last 10 years. Your TT assets, your US assets. Now you would notice very critically that the blue line and the red line are your TT assets and your actual total return. So you can see how in tandem your TT assets are with your US assets, right? So I mean your TT assets and your total return. Your US assets, which are the orange line, you can see that you're seeing a lot of outperformance with the exception of 2022. right? Which was an anomalous year due to inflation and due to the Russia-Ukraine war. No, well, Russia-Ukraine war, right? So there was a dip internationally in all global markets around the world. So with the exception of that, your US assets are the top performing assets in your fund. So you want to, again, continue to maximize this portion. Just quickly, again, cumulative return for the last 10 years is around 34% of the fund, which will be considered relatively very attractive for the pension plan market. And again, noting the difference between your TT assets and US assets, we really want to ensure that we're going to try to increase the return on the portfolio. So we've been focusing, of course, on not only just maximizing your US assets, but maximizing your TT assets to the best of our ability, which is basically making sure we invest in local funds and corporate entities. So we've increased those asset classes significantly in the last year and a half. And the fund, we hope, is going to continue on its positive trajectory into the future. Yeah. I think the next two slides just gives you, I'm not going to go through this. This is a very long, detailed explanation as to what happened year over year. So you will get this presentation so you can actually understand what took place. We wanted to give context because I know it's hard to kind of summarize something this technical in a short space of time. Yeah, don't worry about all these graphs.
But thank
We
you for
won't go
doing
through
it
this
so well.
morning,
Thank
right?
you.
But if you have any questions, of course, you can filter them through Tata Life and it will come to us. We also are going to meet with the trustees next week. So if there's anything that comes up in this meeting today that you want to have asked, you can probably just share it with them. And I'm sure Joel and Adrian and Kurt will be on us to make sure we answer all the questions. Yeah?
Perfect.
Okay.
Thank you.
All right.
All right, so unit cups, or they giving them? No, or no, later. Anyway, well, we just want to say thank you very much, Tata, for taking the time to come and present and listen to all the questions and whatnot. I'm sure we all picked up on some hot topics that we will probably further the discussion just so we add some clarity. And again, we really grateful from the presentation. We have a little token we want to give to you all. I think we have them coming here, right? You know, I think so. I'm just gonna give one, and the rest everybody can pass on, right? So this is a little token. Thank you very much, all right?
Appreciate it. Thank you for having us.
No problem at all.
We're happy to be here. I know that we'll have another session.
Yes,
year,
yes.
So please let us know when of course we will
Absolutely.
come and try to, you know, answer what is necessary.
Oh, come,
Oh,
we got a picture.
Oh gosh.
All right, so thank you very much. Sir. Thanks for coming. Appreciate it and remember us.
Yes, yeah.
That was really good. Those were exactly the topics you wanted to discuss. So what's that? Correct. Absolutely, yes. I know you're gonna have a every year. Even maybe in some cases too easy. But that was really good. All right. Introduce the guys and
I can check this normally. I know from is from outside. They maybe on yeah, sure. I will.
Sorry, hi.
Same.
Yeah, no problem. All is well. Yeah, again, everybody in the same place at the same time, I know is. Yeah, I've been actually quite impressed. Who driving the ships? Yeah. Right. Yeah, good.
Gents, morning again, sorry, but we have a packed schedule today. All right, so if you'll allow me, I just want to introduce Mr. Shane Hammersmith from Shepherd Securities. We would have been in discussion and they have a lot of insightful ideas, packages, services that they would like to present us. And again, this goes along with the whole financial wellness approach we're trying to take, where we want to offer the opportunities to see what's out there for guys to kind of get themselves in order, right? So I just want to pass it on now to Shane. Thanks a lot, and take it from there. Oh, and Shane, just sometimes you might hit a point when we have some questions. Is that okay with you?
Absolutely. If you have
Or
a
you want me
question
to
at any
wait
point.
until after?
No. At
All
any
right.
point in time, feel free to stop me throughout the presentation to pick my brain if you have a question or something that you need clarification on. Pardon me?
I will try and manage as best I could. We do have
No, I run it on time. I don't make jokes.
we do have a little online presence as well, so we just want to speak in the mic so that they can hear, and anybody have questions,
This
just raise
mic
your
is on
hand.
too?
Yeah, that mic, yeah.
Okay.
All right, so thanks a lot. All right, guys.
I think it came off there. Yeah. Right, gentlemen and ladies, thanks for giving us the time to come and chat. As mentioned, my name is Shane Hammersmith. I'm representing Shepherd Securities, which I feel like all of us are familiar with now, even though 15 years ago, you might not have known who Shepherd was back down on Rosalino Street, down in that corner. I think it was the second floor, maybe like, they had like one 10 by 10 room and everything was in there, but they've come a long way since then. Just about 15 years later, over 60 employees, managing over 7.5 billion in assets under management, doing 2.6 billion in trades per year. So a fine-tuned machine, so to speak. As you can imagine, with growth has come the services that we also offer as a firm. So it's no longer just the investment side of things. It's also the retirement side of things, the insurance side of things, fintech, that kind of stuff. And I will get into it here briefly, but just so you all have an idea of what I'm coming to you with this morning, the main crux that we're looking at is the retirement side of things, all right? So I'll touch on everything very, very short, but the main thing we're going to be focusing on is the retirement side of things, all right? I'm going to be going back and forth because I kind of have to click from here. Right. So as I mentioned, just a little bit about us, over 7.5 billion in assets under management. That's US and TT combined. 2.6 billion in trades annually. That's a lot of activity, as you can imagine. Just over 1,000 years experience combined, just under 3,000 clients. And of course, we operate in every currency possible that you could imagine on the international exchange. As I also mentioned, Shepherd has now grown exponentially. So we're looking at not just the investment side of things, but we recently back in 2022 got our seat on the exchange, the local exchange. That's a big deal. As you can imagine, if you have traded on the local market previously, you might have had to have done it through a third-party service. So at least that's how we used to have to do it. We would have to go through someone like Caribbean Stockbrokers to buy local assets for our clients. Now we have that seat, and that is now a benefit to our clients, of course, in terms of costs to invest in the local market. And of course, again, the availability of assets such as fixed income specifically at the drop of a dime, right? Of course, on the international side, we have Shepherd Securities Limited. So that's where you would obviously do all the international trading. That's through Pershing LLC out of Bank of New York Mellon. We have Shepherd Investment Services. We have Shepherd St. Lucia. Just recently, that's for our IBCs and our, much larger estate planning type structures that we have in place from both a tax benefit standpoint and of course, the double CARICOM tax treaty, and we can always get into that more. We have Shepherd FinTech, last but not least, which is Shepherd Technologies, and quite a suite of services we're offering here, as you could quite easily see. Yeah. So I'm just going to touch very briefly on the investment services standpoint. Long and short of it, you can invest both locally and internationally, and how we would typically set up our accounts for our clients would either be non-discretionary, meaning that we set up the account for you. We of course advise you on the account, but you could have it as bespoke as you like, right? But it's an ongoing conversation, or we can set up a discretionary account where basically you say, here's X amount of dollars, just invest it for me. I don't want to look back at it and do your thing, right? So that's generally how the investment side of things work. But the big thing that sets Shepherd apart on the investment side of things, I think from a lot of the competition, is how we structure these accounts to protect you. And what I mean by that is we have a trust structure for a lot of our accounts, for a lot of our clients, right? It's called the Pelagic Transfer on Death Trust, which means that while the account is independently in your name, it is under the umbrella of a trust, and a trust is like a company, and a company can never die. So when we look at things like estate taxes, right? So US estate taxes, if you invested in the States, right? Up to 30% of your assets is taxable by the US government, right? But if you're set up underneath a trust, which is like a company never dies, you don't see that tax on yourself or anybody joint on the account or your beneficiaries, right? And speaking of beneficiaries, yeah. The question is, would it be under an irrevocable trust type arrangement, meaning that there's nothing that could basically go back on? Yeah. So no, so it applies across the board as irrevocable trust agreement, meaning that no matter what, once you pass away, your beneficiaries, the assets go directly to them, all right? And speaking of beneficiaries, the other part about having a transfer on death trust in place is that you don't have to go through probate. As we know in Trinidad, that's something that can take forever. I know from a personal experience, my mother's probate is still going on, and it's over 5 years now. So it really is a toss-up on who you're dealing with. And it's just one of the last things you want to have to deal with at that point in time in your life for your family and for your benefits. So it literally goes, you close your eyes, we pick up the phone, call your beneficiaries and say, where are we sending the funds to? Yeah. So that's one of the big things that Shepherd has in place from a structural standpoint that a lot of the competition does not. And if they do, I challenge you to question how that structure looks, and what is the details behind it, or the underlying details around it.
I just have one quick question.
Yeah.
So I do have a discretionary plan with you all. And my wife is the beneficiary. If she would like to continue on with that plan, is that a possibility, or do we just put it to her name and she continues on the investment portfolio and so on?
Yeah, so that's a good question. So I was just giving you like a long and short of how that phone call is going to go, but it would really go like, so your husband has passed away. This is yours now. Would you like us to send it to your bank account, or would you like us to open an account for you so we could continue this asset, this is portfolio going? So yeah, so definitely we set it up.
I have a question. I have a question, if you don't mind.
This is not being recorded, don't worry, Alex.
Can I ask a question?
Look, looking a little stressed with that question. There is a stress cube there. Feel free to use it. But moving on, that is a good question. But yeah, we could carry on the account for anyone. One person that we cannot carry on the account for would be a US citizen or resident, right? So we would be able to send them the funds. So if, for example, you have, thinking about when you're like, 60, 70 years old, 80 years old, and you have a grown adult child that's living and a resident and a citizen of the States, we could send them the funds, but of course we won't be able to open an account for them. Yeah.
Can you guys hear me?
Yes, go ahead, Rick.
Yeah. Can I ask a question?
Sure, absolutely.
Do you all do gold certificates?
We do not do gold certificates. So we don't do anything in certificate format per se, but we can hold it for clients should they want to have that in their portfolio. So I would say in a roundabout way, we could do quite literally anything on the international trading platform that is available to you. So there's nothing really that Shepherd is not available to them through Pershing LLC. The only thing that I correct myself, the only thing that we do not do would be cryptocurrency trading, such as Bitcoin and stuff like that.
So if I wanted to do a gold certificate purchase, how would you do that for me?
So typically, if we're doing something certificate-based, we'll have to liaise with, for example, one of the investment firms such as Pershing, or, for example, the issuing firm. So we will find someone like Vanguard or BlackRock who could facilitate the certificate aspect of it. And then, of course, Pershing would then liaise with the respective party then to see how we can materialize it. Per se, I don't believe we have ever done that for any clients that I'm aware of. But I do know that they have a vast wingspan in terms of what we can provide to clients. So that would typically be the route.
Well, I'd be interested to find out
Yeah.
at what rate it would be available and what would be the storage costs.
Right. Yeah, no, that's definitely something I'll make a note of and I'll give feedback on for sure. So I could give you a more definite answer. Absolutely.
Yeah.
Okay.
My question is,
yep.
Regarding the gold and silver, and so you said that you can store it.
So
And
typically,
where you
if you
store it?
invest in commodities such as gold and silver, would be through an electronic structure, right? So whether it be a gold ETF or a silver ETF or oil and gas ETF. So that is the typical way that we invest in it. So it's typically difficult to invest online in a direct commodity, right? So you can't buy gold online, or you can't buy silver, or you can't buy oil online. You would buy an ETF that monitors the price of said asset based on what is happening in the economy. From a certificate standpoint, however, obviously, like, there's a little bit more of a roundabout way to getting that done, and it is done. We don't, as far as I'm currently aware, have any of that on our portfolio base, but Pershing being a major international player in the market when it comes to investable assets, I wouldn't be surprised if it's something that we could, bring to the table. Pardon me? Art? No, I don't think, but I'm sure we could look up our art ETF. Similarly, something tracking the value of certain types of art, yeah.
Masterclass, go online.
Right. Do
Yes.
you have access to private placements? Do you do private placements, bonds, private bonds?
Correct. So we would purchase individual bonds
Not getting any audio. If you guys can hear me, we're not getting any audio online.
No, but Ricky, hearing us now?
It's basically like.
Yes, getting audio now.
you're the host. Online, y'all hear enough? No, go ahead.
Street budget. Depending on what type of
decide on what type of life insurance plan. This annuity is in US, those in US are also insured. Yeah, that's a good question. So listen now, this plan is owned by Pipes, it's owned by, which means that if you decide to quit, or the current company, it would be held by maturity date, issue to maturity, or if it has 7 days. And at, let's say 55 or 60 or whatever you choose, at that time, you will then get a report from the court, whatever is the other side of things, say that the plan is mature, either goes let them know and give you the options at maturity. You can't get over. Not this one. So, so you get individual plans, Apple, good. These individual plans will be independently in your names, specifically, directly owned by you. This one is owned by you.
Okay, sorry. So when I that pictures, your names before we sign. If not, I can't with the purely fund. So you got
So this sounds like a good question. So this would typically be this would be a discretionary fund. Meaning that our trading team manages this. You do get to choose, however, the level of risk. So expensive.
Back.
But I don't understand because if 15 of us have signed up.
Right.
You just said it was that it's a hybrid thing. So it's a group thing. It's yours.
Yes.
Provision is offered to you under the.
Yeah. But each one of these accounts are independent, meaning that, yeah. So it's not like everybody's money is in one account invested.
So individually, you can set your own time for horizon.
Correct. So each person sets their own retirement. So if you set it at 60 and then you decide, you know what, I want to retire 5 years earlier, you can bring it down and vice versa. But each of these are independently in your name. But how it would work would be, let me just finish. How it would work would be, let's say 10 of us are signed up, right? Nicole will have basically a deposit Excel sheet where Tom contributes $5,000 to this plan. Harry contributes $20,000 to this plan a month. Right, and then from there, our team will then put it into each of your accounts, and each of your accounts are specific to your investment time horizon or your investment risk or investment profile.
But you're saying that can't buy out, that can't come out. You set your own age that you want to retire. No. If you wanna come out early, I guess that's something you come, you'll have to decide.
Yeah, so that would be on the company's side of things. So because the company owns the plan, right? If you wanted to, let's say if you set a retirement age at 55 and you wanted to come out at 50, we could amend it to then. But if you wanted to come out before that, that wouldn't be possible because remember it's an annuity, right? So it's stuck within the parameters of 50 to 70. And because the company owns it, there is no surrender aspect. So what you're referring to is if I wanted to surrender this plan at 45, right? And just walk and pay back my tax to the government and walk away. That facility is not available for this type of plan because it's what we call a corporate annuity, right? Correct. Yeah, you won't feel it on your dollar wallet.
Right? Coming out of the money you pay the government. Coming out today. That's the aim of it, right?
Yeah.
Sorry, but again, okay, sorry, go ahead.
My question is, what happens if departments are charged some taxes?
Well, then.
Because, there's a $1 million threshold where your taxes jump.
25 to 30, yeah.
About 25 to 30. That's going to change because now you still get.
Well, you still get tax on it, but instead of paying 30% on let's say you're still above the $1 million tax bracket, right?
No, let's say that takes, below the million.
Yeah, so then you pay 25% instead of 30%. But even if you stay above the $1 million tax bracket by maxing out 1/3 and your 60K investable, you're paying 30% on a reduced value regardless, yeah.
Yeah, we done.
Well,
Yeah.
Sorry?
Oh, gosh.
Yeah, so, contributions. Is actually the yearly and in
Okay.
so I don't really need to-
Yes.
So the contributions, is only being done while you are employed, correct?
Yes.
All right, so, let's say I decide to have this mature at 70.
Mhm.
I retire at 65, after 65, I don't contribute anymore.
No, you wouldn't contribute anymore because remember, it's coming from your salary from the firm. But if, for example, this is the corporate side of it, right? So we have the individual side of the same thing where it's specifically in your name. So if, for example, you retire from the pilots at 60, but you have a plan that's maturing at 70, one of these individual plans, which you could set up as well, you could keep contributing to that as much as you want there and after.
All right, and then the other thing is, if there are points where it doesn't make sense to start a plan, let's see.
Let's say that like retire in 2 years, basically. What's the optimum target? What's the optimum target?
Yeah.
Up to 1 year ago, it makes sense for somebody in that category, that in bond years.
Absolutely. So, yeah. So you save tax for 2 years, you get US for 2 years, but there's a facility available to all annuity holders that a lot of people are not aware of, and that is the transfer. And this term is very, very important, the transferability of your annuity, right? So I don't know what has been going on for the last, 5 or 6 decades between, these banks and insurance companies that offer these annuities, but they keep it on a whisper level, not letting you know that you are fully in your right. If you're not happy with company A, you could take your annuity and take it to company B with no charge. What has been done in the past, if you ever went to them and say, you know what, this future cash thing, I know you're making more than 2%, but pay me 2% and charging me 3%. That I'm making sense, right? And you say, I want to move this over to Shepherd. They will say, okay, you want to surrender it? And that term is where they catch you. And you go, yeah, sure. Well, then now you have to pay back your 25% to the government. But what you need to be able to know, or have to have the knowledge to say is, I know I have the right to transfer my full annuity from future cash to PT dip with, all right, sure, RBC might have their own penalties and stuff like that for transferring, but it's not surrendering the plan. To answer your question, if you have 2 more years kind of stuff, and your goal is to have US dollars in your pocket, right? A harder currency, a stronger currency, and you're 2 years away from your retirement, you could take whatever plan you've had in place for the last 30 or 40 years, transfer it to Shepherd, convert that entire amount to US, right? And then for the next 2 years, you contribute, and then you come out with a US lump
So
sum
I
at
could
the end.
take my old Guardian plan that I paid for the last 15 years.
Yeah.
And transfer it.
A lot of our clients have done that. You can't imagine the amount.
Okay.
Probably not at liberty to say the higher ups from X companies that have transferred their own plans as well. Yeah.
But some of these.
That offer other plans.
Some of these providers,
Yeah.
usually happen to my policies where would have signed that on where.
Well, I think the most important thing is that we reach out to you first.
We have kind of with them. Right.
Yeah, correct. So like, as I mentioned, so they might charge, you would see they will come out with some fine writing in bold, real small at the bottom of your contract, saying that's how if you come out, you had to pay us 2.5% on the net amount kind of stuff. But I mean, that's negligible compared to paying 25% back to the government, which is what they try to scare you with, right? All right, well, if you want to transfer, if you want to surrender your plan, you have to pay back 25% to the government. And you have to go, no, sir. I didn't say surrender my plan. I said I want to transfer it. And then they will go down. He did his research. All right. Yeah.
So who's holding the annuities? Is it Shepherd only or you outsourcing?
No. So this is a government BIR approved annuity plan. So once you have your contract stamped by the BIR, we give it to you, you put it into your safe for safekeeping, or you could have us hold it for you in our safe for safekeeping. But you need that contract at the time of maturity, yeah.
More question. You mentioned retirement. Is it, you have to retire or is it you just pick a date and collect?
You
money?
just pick a date, yeah, yeah.
So you don't have to retire?
No, you don't have to retire. You choose a retirement
be the
age
60 or
between
more-
50 and
more
70.
fun.
And if you keep working after that, that's your business, but you just chose this plan to mature at that age.
Right, is that investment secured, insured, sorry? Insured?
So we have to keep in mind, so it's in US dollars, right? So we have depositors insurance covered up to 200,000 through Pershing and Bank of New York Mellon. And then there's full coverage indemnity if there's something that happened, like what happened in Jamaica earlier in the year with another company with the acronym SSL. So it wasn't Shepherd, just so you all know. But if something like that was to happen from a fraudulent standpoint where, employee A has been thieving everybody's money for you're completely covered from that standpoint. But if, for example, there's a crisis, like in the world crisis or something like that, yeah, it's just a depositor's insurance up to, I believe it's 200,000 US, what is in place per client. Per client.
All right, guys, I hope the questions were very intriguing. We really appreciate. We're gonna have the presentation on the web. We'll be able to share this with our members, right? So we're gonna have this on a little tab on our website. Anybody needs to take a look? Sorry, what was that?
You got a more detailed
Or
on the mechanics and how it works.
on the actual product, yeah.
Yeah.
Maybe not.
So I have an example here. I know I'm out of time. So this is actually online. This is our PTDIP calculator. So you could literally, quite literally plug in figures, contribution amounts that you want to contribute and see what that's going to look like at your maturity. So very quick, John Doe, this person, 1989 was at 35, wants to mature at 65. They're an aggressive portfolio because they're pretty young, so they're in the Blue Marlin, and they contributed monthly. They initially deposit, it says 15,000, and they contributed 15,000 a month to their portfolio. At maturity in 2054, they were contributed, figures are there, so I can.
In 5 or 6 million.
That 5 or 6?
Look like
Right,
five.
so that's 5, right? 5 million they would have contributed, they would have saved 1.3. And the projected value based on the aggressive portfolio was, of course, we're using historical data, just under $15 million, right?
You know, most companies have this projected value.
Yeah.
I think it's a great company. And it almost never comes to that. What is your actual payout at this time?
This is it. This is it.
That's
This is
historical.
actual. This is actual. Yeah, of course, this is based on historical data, right? Based on how our Blue Marlin has been performing, and you could literally go in and plug and play and see what those figures look like.
Gents, we have other presenters outside waiting. Yeah. So if we could, I'll liaise with you.
Right.
I'll have an idea what we need. So maybe I'll just copy the link for this calculator, maybe whatever on your website, what PTDIP has to offer, maybe the BIR information, and we'll package it for you guys. But I really want to, if anybody interested, get your name down, let Nicole take it so that we could try and get as much as it's organized. Yeah, and it's also on the website.
Yes,
as well.
everything is on the website, and from a mechanical standpoint, remember, like all of our strategies is one of 3 strategies, right? Conservative, balanced, or aggressive, and that is professionally managed by our trading department. And of course, we have our back-end research that we obviously use to support.
I want to take the time, Shane, to tell you thank you very much. I think it's been very informative. I think a lot of the guys interested, and we will try and get. We have a target in mind, how many numbers we want to get, and we just have a small little token here we want to give to you.
Thanks, I appreciate it.
All right, so again, thank you very much.
Cheers.
All right.
Cheers. Cheers. Yeah.
And I have one for you as well, that's it. Sorry about that, but that
No,
is-
I know, time is up.
Nah, these guys are having talking whole day.
Exactly.
You know, but definitely like what we will do.
But what I would say is, this transparency. When you log in online, you see this is really me exactly that. What is
So you can take a little 5 and then. So the next one is at 11:15, right? So we have about 15 minutes. Will you be able to send us this presentation? Or whatever you want us to put, we put it on our website, it's control area. Just for members, because some of the members were online. Yeah, all right, so, but it's not very secure place. I think about it, and for that, but I know my audience, and no, I know my audience, and these guys don't operate like that. I know everything on the website. This is pilot to talk about, they want it on a plate. I have to bring them here. I know it's on the website. As I say, I know it's on the website, but I know these guys.
Yeah.
They need it in front of them, but,
Yeah, okay.
all right, guys, we're just taking out a 10 minutes break before we back on.
Yeah, exactly. Okay. Yes, but I'm sure. But Steve will be mine. Okay. I'm like, I know Patrick Hammersmith because I'm right. Right. Well, I'm like the lad up in the family, yeah.
So Luke is my account manager.
But it should be separate from that.
Can I transfer it over? Can I say, right, I don't want it to come out after my salaries and tax. I now want it to.
This one specifically, I don't think so. That's
So I end up with two then.
Yes, you end up with two, but this one you get to put in your money before it's tax man.
So I'll be able to stop that one and then.
This one, it's not at any point in time. But and it will just continue to grow as well. Like, there's no penalty to stop contributing or anything like that. And if you grow out.
Like, I put like 2,000 TT a month now, I could just join and put 1,000 TT a month in this.
Yeah.
And I can put 155 and 160.
Correct, you can ladder it just like that, so you have different things. Yes, sir.
Was
Yeah.
That's who came by me too. Anyway, I'll be in touch, but I usually, like you said, Luke,
Right.
is one of my, but I have a US portfolio, but not the aggressive, I want the lowest, because I have someone who is to retire.
Right,
I are a little more.
Risk averse.
Yeah.
Understandably so.
I'm interested because I guess the company will now contact us and tell us how we can. But they will calculate like how much I can.
Correct. They will let you know like what your range is, and then you could decide then, all right. Well, let's go to the top, actually, you know what? Let's go to the bottom. So it all depends on how your expenses are lined up. Yeah.
That's a 15 minute. Don't you even know what it's actually for weeks and by the government? Sorry, so I feel like when it comes to maturity, how do you get down how the tax let's say rate at a higher amount, but that that's it. It makes sense. I mean, I guess we do a short. Set your maturity for 10 years. Back. Yeah, that's everybody different. And your keys are owners and everybody. It would be like central bank. Right, that's right. We can, just like a runner. You have a passion. Can't buy it or whatever. You have no chance. Yeah, you can be both. Like, turn off something. That's already considered a task.
Yeah, we can.
All right. Okay, gents. Gents, good afternoon again. Thanks, everybody. With what? Yeah, we going good, we're doing it. Gents, we're gonna try and get started. Afternoon, all right. Just for everybody knowledge, lunch is going to be served in another 45 minutes. All right. We just got word from the kitchen, so 45 minutes for lunch. We're gonna get started with the Murphy-Clark presentation. So if we could just settle down and let's get started, all right? So whenever you're ready, we could so do I tell them we link back up on him?
Yeah, link is back up on it. Good. Flash, right?
All right. Joel, Matt, you guys, if we can get some seats, please. Stuart, Adam, Alistair, yeah. If we could just. All right.
How big is the pen?
3.
Next. That's big. Yeah, I'm connected to Wi-Fi.
Don't worry, link, we get started without them, Yeah, it's more important group.
No, the sending the
Oh, the presentation.
For that one, yeah.
Which code is that you have? No. The extempo is after.
Oh, yeah.
So because we got online, well, we had an online group, we were using the mic to talk and the questions they will. Also, we are now starting the presentation, we can be submitting on our website, and security. That's fine.
We have copies of it as well now.
Hard copy?
We can email it to you.
Let's have a look at the website, we must have all the presentations from the city. No, I don't have it.
Amount of people in one spot.
Don't lose the crowd and the
Idea? Yeah.
Get right there. We can then- Yeah.
That's what I'm doing anyway. That's good.
The computer not working with the, it should be fine.
So this, on the email when it said start processing.
Yeah.
Right.
Good.
Yeah.
Cool.
All right.
If I just click the mouse, it'll switch, right? Okay, yeah?
All right, guys, thanks a lot. So let's get some attention. Right. Yeah, go
Hi,
ahead.
okay. Afternoon, everyone. Apologies for the delay in the setup. We had a few technical difficulties. Y'all hearing me?
Yeah.
It's not a mic. What is?
This mic is
Okay.
online.
Okay, good.
Hello, hello.
No, once you're hearing me, it's fine. Okay, nice. Okay, so our managing director, Leslie Clark, was here, but unfortunately he had to step out at 12 o'clock for a little emergency. So I am here to present. My name is Danielle Mengo. I'm the portfolio manager at Murphy Clark Financial. And this is my colleague, Andrew Charles, who's also a portfolio manager. We have Selena with us, who is part of the portfolio management team and the risk and analytics team. So we will run through this as quick as possible and take any questions at the end. So Murphy Clark is basically we're an investment company. We're not a bank, we're not insurance. We are purely investment / family office type business. Our vision, Murphy Clark, was built by families for families. A family should have a personalized financial structure to achieve their goals. We have an honest partnership, knowledge of a strategy, and superior returns while mitigating risks. We have two approaches to investing. We have discretionary accounts and we have non-discretionary accounts. The choice is yours. So discretionary services. So basically we control these accounts. We make all decisions on our clients' behalf. We basically get to know our clients inside out and base the portfolios on the client's whole life experience and what we want out of the account for the clients. We also have non-discretionary accounts where if you want to invest on your behalf, as in you want to make your own trades, you can open an account with us and put through any trades you would like to make on the stock market or bond market, anything you want, but you have full discretion on that account. Tailor-made. We customize each account to each client. No two accounts are the same with us. Every account is tailor-made to the specific client and supported by a full asset allocation model and risk assessment. Accessibility. You have access to all the portfolio managers, the managing director, our analysts. We even set up meetings sometimes with our brokers where you can come in and actually speak with our brokers out of the United States sometimes. And even our board of directors. Everybody is willing and always open to answer any questions or take calls at any time. We're a local company, but yes. We invest in the US market primarily. Yeah, so we go through a lot of the US-based brokers. Yeah. Flexibility. We are typically a long-term type investment company, but we are very willing to work with people who have specific goals in mind, such as you might have to pay for university for your child, any goal, retirement, anything, or any other short-term predicaments you might have. We are very willing, and liquidity is one of our strong points. We pride ourselves on liquidity. So anything emergency that comes up, we can act in a matter of minutes on your behalf.
What size of your portfolio?
The size, we have a, as in like our assets under management, Andrew, you know it?
The hundreds of millions.
Sure.
Sorry.
To answer that question a little bit more, we have about 800 accounts with us. We're not mass marketing to the public. We are more focused on family office type accounts. So more reference based, and we keep it within the families. So we do more like intergenerational investing, moving down from grandparents to children to grandchildren, and for about 15 years. Yeah. Going backwards. So the concept of investments, investing is geared towards building wealth, achieving financial security, and generating income for long-term financial based goals. This can be done various different models and different assets. So Andrew will talk a little bit more about our assets.
Okay, so altogether we need to be in shorter space of time. So through our investment vehicles, we invest the money on our behalf, and we generate alpha returns, and the process is very simple, straightforward, by means of some common investment vehicles used, which I'm sure you're familiar with: stock, bonds. So stock simply equity, which shares in a company, which sometimes medium to high risk type of investment structure. Bonds, so loan from you, the investor, to institutions and government, where you basically you earn interest, and that's more of a steady risk type investment for income. Mutual funds, hedge funds. So it's a pool of investments, most of them similar, pool of investment structure, where you invest in the variety of assets in the fund. Mutual funds are usually low risk, hedge funds are more high risk, aggressive type strategy.
Yeah, and so what'll be like a minimum buy-in to start a portfolio with you guys? And the second question would be, what are your fees like to invest with you all?
We have no minimum to start. There's
Okay.
no minimum because I said like we are reference based and family oriented. Once we know you want like have a good reference, you can come in at any amount.
Okay.
Fee based, we're very tailor-made to fees. No fees are the same. We do follow a generic schedule, which is about 1.5% of the market value of the account. So if your account is doing 9%, then net you're making 7.5%. But like I said, it's tailor-made to each person, so that can be negotiated as well.
And what kind of timeline you get? Let's say I want to cash out on piece of my investment. I need some money now. What's the lead time between me sending an email saying I want to cash out 25%?
We can usually send it by the next day.
By the next
Yeah.
day? And this is US dollar investment we're talking about.
US
Till
dollar.
we buy in at, till we buy in at TT and you all convert?
Yes, we do. Yeah, for sure. We can invest in the TT market if you want it also, but the TT market is not very liquid. We prefer to go into US and you get the higher returns with the US market as well.
So it's all situation.
Yeah.
That's the way you look. But some people.
Accessibility and ease of opening account are something the pilots also, that's something that you should try and, package as well. How easy is it to open? Is it something that you're willing to come to the office, set up a time,
For sure.
Is it something that we have to do in our off time? Like how easy is it to set up?
It's very easy. We can simply email the forms to you and you can put a digital signature on it, send it back to us. We can come to the office, sit down with you, fill it out, no problem. That's it. 2 forms of ID, utility bill, that's it.
Okay.
And it's set up one time.
Fair enough.
To deal with, home offices, so deal with the entire issue of trust funds and will
Yeah.
preparation and all of those things.
Yes, so we do partner with some attorneys who help us on that. But we would put you on to the attorney who will work with us now to structure an account in partnership with the trust.
And one more question, if you don't mind me probing and asking is,
No, go
you
ahead.
know, we've been, we here today under, sort of financial umbrella, and we have the privilege of seeing all these services being offered to us.
Right.
If you just don't mind, if you, like in a nutshell, like what sets you all apart, or, why we should come with you guys, or anything like that, you could enlighten us with, or is there any competitive advantage you have that you see,
So-
that you perceive, maybe, I don't know?
I think our accessibility, I mean, our clients call us, WhatsApp us, email us, all day. We are
Okay.
available at all times of the day, night, vacation, whenever you want.
Okay, so
We-
being sort of small, it makes accessibility directly to your portfolio.
I think so,
Easier.
yeah, where it's easier for us to focus on the relationships because like I said, we don't have the mass amount of clients. We more focus on the relationships that we build with our clients. It's also, I think what sets us apart is our seamlessness when it comes to transferring of accounts or assets, whether it be from parents to children or if something were to happen to you, we have things in place where you don't actually have to wait for wills to be probated. We can actually act on behalf of the clients and I
Okay.
think it's ease of business.
Anybody have any questions from the floor? No?
And to add, I think it's the way we operate and deal with our clients as well from a strategy perspective.
Yeah, okay.
And we have constant communication with our clients, we provide a lot of updates when things or events take place in that kind of situation.
Yeah, no, I just wanted to highlight that,
We're
again.
active managers also, so I know a lot of the other companies, they would rebalance portfolios, whether it be quarterly, semi-annually or annually, whereas we are managing portfolios every single day and changing portfolios, buying, selling, and monitoring assets all day.
So more vibrant per se. like-
More active, definitely more active.
All right, and is there a way to get more information after this? Like, a brochure maybe, or you said maybe add some hard copies or something like
Yeah,
that?
we can send emails of
Yeah.
everything too.
Okay. Yeah. No more questions now, man. We hungry. It's lunchtime. But I think we touched on so far on all the points that we had gathered here today.
Yeah.
Our accountant is here. So normally what the guys are doing is like leaving their names for which services that we are accustomed to, and then we
Right.
expect whatever groups we have for the different vendors, we will try and make another contact with you guys in case they have more questions eventually.
Flexible, so she could always reach out to us.
It's not trade, they'll charge, trade, they'll just charge yearly on.
Trades, we do charge a minimal fee for trading, but it's nothing to really talk about.
If you're trading a lot with cash. So people do that on some of the charges. for it.
Yes, I think so. Also, I think because a lot of times, like for example, if you're investing in, if you have an account with Interactive Brokers, when things happen in the world and the trading becomes a lot, those sites tend to stick and you don't get through with your trades. Whereas we have accounts with like Morgan Stanley and Stifel who are able to put through these trades with us instantly. Yeah, there's no sticking with any of that. Yeah.
And the fees per year is kind of the power charge monthly, or the charge on the end.
How much you own?
It's charged quarterly. So it's 1.5% annually, charged quarterly. So how,
Wait on that.
weighted on that quarter, yeah. So if the market is up, you'll be charged based on the market value of the account. If the market is not doing good, obviously your fees will be less at the time.
Quarter, quarter of your year charges.
Yeah, so you get statements quarterly and you'll see your charges and everything on it.
Of course, it varies with the assets you have in your portfolio.
Yeah, so that's kind of more 1.5 of the bonds, if you have mostly bonds. The stocks don't really incur a big fee at all. It's more bonds. So if you have 20% in bonds and 80% in stocks, you're really only getting charged only 20% of bonds that you hold.
Right, so equities that are held in the account, charged how? Just on trade?
A small trading fee and a quarterly fee as well, but it's minimal.
I guess what we're trying to get to are your fees competitive? So,
Our fees are very competitive. I will tell you, we should be charging more.
okay, great. All right, well, if you have no other questions, we will try and, guys, so basically want to try and pull it, so everybody's interested in different vendors. You get your names down on a little list and we'll try and have some follow-up sessions if there are any more questions on, and we'll try to facilitate a process to make it easy to get an accounts sorted and set up. All right? You all okay with that?
Yeah.
Yeah.
Sounds good.
All right, so we just have a little token for you. Thank you very much for coming out, taking the time, doing a presentation.
No problem.
And don't mind if we're a little quiet, we're just hungry.
I know.
But we very much are grateful. This is not, we don't often see all of us in one room. So this by itself is a task, so let's bear with us. But thank you so much.
problem.
Just gonna give one from
And thank you very much for having us.
and thank you. Alright, so
Thank you.
thank you so much. So what we'll do, we'll try and see I'll try and get a list of how many people are interested and we'll try and reach out. All right, excellent. Thank you very much. Denise, I don't think we're going for a break. Let's bring in Guardian now, right? Yeah, so. Okay. All right, so we're not going for a break, all right? We're gonna have our next presenter coming now, and we're gonna have lunch in 25 minutes. I do think that while the presentation is going on, if you could quietly, shimmy around the back, get some food, and then return to your seats and we'll have the next presentation, all right? So thank you very much again, Murphy Clark. I don't know. I'm trying to get both done at the same time, get the food done and the presentation and. No. I'm eating the lobster, please. We're eating the lobster, put the shell on the side, all right? Looking at the thing randomly, I didn't calculation with the right? Very beer point. The irony will be something good written about the shipment. Never knew that. We're not breaking, we're not taking a break. Hi. Let me just get IT. Where Damian? Keep disappearing. Anybody buy?
Number one person or
I just have IT coming so they could put it up on the screen, right?
Sure.
We're going very good. Just to see a lot of things.
Faction is hard or email? Pleasure to meet you.
Email, oh, there he is, coming in.
Something about faction is hard or why? That's my best. Only one.
All right, guys, so again, going along with our agenda, we're moving along nicely. We have Guardian Wealth Management. We'll be doing their presentation on their wealth management portfolio and whatever vehicles that they want to offer to us. And let's give them the same sort of courtesy and attention as we give the others. Can you go a little bit behind time? We will have lunch in the background.
Share screen, I use my mouse. Oh, you're good. Yeah, share screen. Probably using mouse, so. I think we can move on. Let me take the mouse down. If we find out, yeah. Wow, run no point. Okay, good afternoon, everyone. Are you all hearing me? Good afternoon, good afternoon. I'd like to say thank you on behalf of Guardian Asset Management for having us here. You guys are doing some very quiet but exceptional work, and I'm sure the country thanks you for that. They probably don't thank you enough, but on behalf of us, continue to do exactly what you're doing. Oftentimes, the persons who control stuff are the silent ones, so continue to do what you're doing. Excellent work. Ryan is the person who's responsible for this, in conjunction with JP, so we want to thank you. Ryan is one of my private wealth managers, breadth of experience. He has probably 2 masters, and the last one he did is in decommissioning. So he doesn't only understand finance, he's very involved on the technical oil and gas side. So he brings a level of intelligence to us that is really, really unique and exceptional. To my immediate left, I have Catherine Tomu. Catherine has been with Guardian Asset Management for probably like about 14 years, 15 years. Catherine spent a lot of time running real estate deals and transactions on the wealth management side at SunTrust, actually in Miami. Catherine is my senior manager of private wealth and is responsible for what we term boutique loosely, the very ultra high net worth clients. Catherine also has a breadth of experience and has run real estate projects, has run financial models and deals, so she understands the numbers. To her left is Stephanie Mohes. Stephanie is our portfolio manager, and she has been with us for just a few months. Stephanie also brings a breadth of experience, particularly on the financial services side and investment management and portfolio management side. Before here, she was at RBC, managing a massive portfolio. I can't remember exactly what size it was. Also has quite a few credentials and experience in the financial services sector. I am actually just a humble servant. I spent a little while or some time at Unit Trust Corporation. My title says sales and marketing, but really what I am is a businessman. I'm the guy that sees the floating dots and makes some sense of it. So without further ado, we're going to just push forward. What I understand is that you all already have a pension plan and those features and services in place. So what we're really here to talk about is our private wealth solution and how we're going to take you from wherever you are now to where it is you actually want to go.
We also open to the pension discussion, maybe not here.
Okay. So there's another guy that sits in our space that is the specialist in pension. So we don't want to come. Perfect. We'd love to come back and have that discussion with you guys. So really and truly, it's not really about the instruments because everybody has the same access to the same instruments, or most people do. It's how it is you take the talent that you currently have and create that orchestra, that symphony that really makes things work, right? So, who's my marketing person went real fancy here, boy? So Guardian Asset Management basically is a combination of two entities, Guardian Asset Management Investment Services Limited, formerly called Gamasil, that's the private wealth side of the business, and Guardian Group Trust Limited, which is the merchant banking side of the business. Those two entities come together. The private wealth side is regulated by the SEC, and the merchant banking side is regulated by the Central Bank of Trinidad and Tobago. What basically we have grown from 2003 to now, we are just over or just under $8 billion in assets, just about $7.5 billion in assets. That's at the last quarter. And we do provide individuals, SMEs, and large corporates some really unique solutions. And we're going to talk more about that as we go forward. The executive team comprises of these 5 persons here. The head of the team is Miguel, that sits as the president of both companies. And then we have Narissa Osine, who's our VP Investments, a CFA charter holder. Persons who may be familiar in the investments management or investment services world, CFA is like creme de la creme, right? We have Paul Winter, who is our VP Strategy. He's an accountant and FCCA and spent a lot of time in that space. And we also have Sandy Merritt, who's our VP Operations and Technology, who came from EY, leading massive projects and also sitting in that particular role now. Added to that executive team, we do have about 4 CFA charter holders. I recently onboarded one on my sales team, and there are about 3, I believe, on the investment side. So the power of it really is, you know, the whole is greater than the sum of its parts. And that's what it is we would have spoken to originally when we say it's really the expertise separate and apart from just the investments that we provide. Right, we would have spoken to, you've seen the growth in assets under management here from year on year per quarter. Let's speak a little bit now about our investment philosophy. Any sort of success or any deliberate action that leads to success is built around a philosophy and to a large extent, a framework. There is a way how you do certain things in a particular way. So our investment philosophy really sits on 3 pillars. Our investment framework, how it is we actually control emotions, and by extension, the access we provide to you through our private wealth offerings and solutions. So let's talk a little bit about the framework. Traditionally, what we see is a 60-40 portfolio that sits in the traditional space. 60% bonds, 40% equities, 40% bonds, 60% equities, and there are variations of that. Most of those assets sit in public spaces, meaning that the public the assets are available on a listed exchange, or the fixed income securities can be easily traded also through brokers on an exchange. What is different with us is that we basically put the customer first. Not only do we look at the traditional approach to investing and portfolio management, we also provide you with a host of assets up the top there. Preservation is the main focus. We look at liquidity, income, and potential opportunities for growth. Tax minimization is done through partners that we do have. We aren't necessarily a tax firm, but we are affiliated with the Big Fours, as you all would know them. And then you have this whole slew of these offerings straight up to the top. So this is not only a strategic investment approach, it's also relatively tactical. When we talk about control of emotions, right? In any business, there's a prediction, there's a hypothesis. So we say, based on all these trends that are happening globally, all these microeconomic trends, macroeconomic trends, what's happening currently within our market space, we predict the market is going in this particular direction. We build a plan around that, and we continue to test the plan, test the data. And once it validates the hypothesis, we basically continue to persevere and push forward. Another element to this on the retail side really is, we are really financial coaches. What we are is we help you to control emotions. Most people buy when the price is too high, and most people sell when the price falls. That's actually a counterintuitive approach when it is you're looking at investments and also the investment management world. And then the last part, before we actually get into the meat here, is access. We provide opportunities. All these assets here, you would see Catherine and Ryan would speak to it in a level of specificity. Bonds, IPOs, private credit, private equity, regional and sovereign issues. We provide liquidity management through the different types of products that we offer. And then we have spoken about it before, our human capital, which is the expertise that sits within the respective spaces that turn a dollar into $1.25. So I'm going to pass you over to Catherine and Ryan, who are the persons who actually manage the relationship. And they are going to tag team and work through what the current solutions look like. I'm gonna take it for you.
Very good. Good afternoon, boys. All right, so basically, thanks for Emil for that riveting introduction. So essentially what we're looking at right now is an example of what a model portfolio will look like, dependent on your risk profile, because I'm certain each one of you inside of here will have a different risk profile. You'll have some conservative, you'll have some aggressive, you'll have some moderate. So in this instance, we're using a moderate example of a total portfolio size of $1 million US. So essentially what we will look like, as Emil would have mentioned, we're looking at a ratio of 60% equity, 40%, 35% fixed income, and then your cash facility will be around 10 to 5% dependent on if it is you want to have some excess cash or excess liquidity available. You'll see a lot of familiar names here, right? NVIDIA, Meta is Facebook, Netflix, Amazon. So these are some of the examples of the stock that we potentially will buy to fill into your portfolio that can give you significant capital appreciation. Now, you realize, for not to go too granular or too technical, that the dividend yield on these equities are on the lower end of the spectrum, simply because these type of assets, as we are speaking towards a moderate portfolio, tend to be those type of assets that will move a lot faster in terms of our price appreciation on the market than what you will usually find with a stock that's maybe trading on a commodity or utilities basis, for example. For example, like a General Electric, even within your industry, you may look like a company like Maersk, for example, that may be traded, will have a higher dividend yield than some of these others. You realize that these are mostly technology companies, right? Technology stocks. Within here, we also have some fixed income components that will give you fairly solid yields. You're looking at it from an 8% come straight down to a 5.5%, where we have also the capacity to build in assets that are available to us, that are structured, right? Especially structured for our business, where we have a contingent coupon inside of here that gives you a significantly higher yield than some of the other assets you'll be looking at inside of a portfolio of this nature. Simply because, again, as I said, this is a moderate portfolio. Now, the components within this portfolio can change if we're looking at you from a conservative perspective. What will end up happening is that this 40% or 35% will be in the majority of your portfolio, where we see the bonds take up more of your investments than the equity, and you may see this total below, where we have treasury bills and also our monthly income funds available. There'll be a rotation of this. You'll tend to see less equity, more of these positions for a more conservative portfolio. That was the moderate. So let's go to the aggressive. Now, the reason why we selected the moderate and aggressive portfolio to show you guys, because I consider this, the Pilot Association, to be a risk-taking crew. All right? My partner JP can attest to it. All right? So, and my Mark is a golfer, so he takes some risk with that. So we go into the aggressive side now. So the aggressive side is more or less what you'll tend to find is a little bit more risk on the equity side than you'll find on the fixed income side, right? So you realize that on the equity side, we have gone more 75% in terms of in equity. We're looking at a smaller portion with regards to the fixed income. We still want to maintain somewhat of a 5 to 10% on the cash flow. Because the reason why we still want to maintain here is if you may want to have access to some of your US cash. If it is you want to travel, if it is you want to invest in real estate,
if it is you want to invest in anything outside of the usual stock, bond, equity areas, we always say, you know, keep some liquidity in there in place. Right, so this is more on the aggressive side. Again, similar type of assets. Now, we do have the conversation with you as clients where we, you know, as Emile said, is coaching. You may have a stock that, you know, you might be sitting on a plethora of knowledge because of the industry that you're in, and it may be a stock that you want to have in your portfolio, for instance, and you say, Ryan, listen here, what, let's position and put some stocks that you're aware, you may be aware of in your portfolio. We'll have the discussion and we will build that into your portfolio for you, essentially. Because as you say, you know, even though I have my master's in decommissioning, that means I know everything about what you guys doing out in the ocean there when the time comes. And I know there are a lot of companies that are doing really well in that space. So again, you know, as I said, smaller position on the fixed income side, similar 5 to 10% within your cash. Consider these cash positions. Most important thing is that everything is earning interest. The money is consistently working for you. We try to be in a position where, you know, the assets are fairly liquid. We do have a very fully functional treasury team behind us, where if it is you want to disclose or close off a particular security, we can get that done within 24 hours, cash back into your personal checking accounts or saving accounts in literally 24 hours. So there's very little of your money being tied up in any assets in particular. We won't be all if anything has ever happened to Guardian, but the cash, the assets belong to you.
That to get the cash back, that depends on how much you have in the money market instruments, or that even if it's in equity.
If you want to sell equity today, we will sell equity for today, and you get the cash once. We probably have 2 days settlement, and you get the cash wired or check written.
You should also look at the price movement. Okay, you want to find you invested at $10, $1,000 at 10, and then when it is ready to sell, the price is $9.50.
Yeah.
You're gonna, right? So
Especially on the US side, it's very good.
Yeah.
You can sell the US equities and it takes 2 to 3 days, and the bonds as well.
Yeah.
But just to give you a bit of knowledge on the market right now, the market is at an all-time high. So if you were to come and tell me, say, Ryan, and the reason I say that because 3 men inside of here, no man's bumpy. If you come at 50,000 US and say, hey, you want to buy some stock, I will probably tell you no. At this current juncture, because the market is at an all-time high. As Emile mentioned, what tends to happen, we get carried away, buy at the high, buy at the top. You don't go and buy a brand new vehicle for $1 million when you can get it for $500,000. Right? It's a big difference in that regard. So I would tell you, hold off. Let's buy bonds. Let's look at treasury bills. Stay in some more liquid assets. So when the market does come down, because it will happen, the market ebbs and flows. You have your troughs when the market is down, your peaks when the market is up. Then say, all right, let's look to build a portfolio now. You have enough cash. The assets are trading currently at that discount on the market price. So that's when you look to enter the market in most instances. We have a moderate portfolio on the TT dollar side because, I mean, at the end of the day, we are in Trinidad and Tobago. We do have TT cash. So the standard stock in Trinidad and Tobago, what tends to happen in Trinidad and Tobago is that you get a fairly decent dividend yield in your stock prices in Trinidad and Tobago. Now, for those who have pension plans already in place, you may see some eroding in value in your pension plan because the prices on the equity in Trinidad and Tobago has been somewhat flat over the last couple of years. If I could tell you why, I wouldn't be here probably, but there's really no reason why some of these assets should be trading at where they're trading right now. However, they do pay a very good dividend yield, which is important, right? You have to keep that in mind. We also have access to quite a lot of our local Trinidad and Tobago corporates and government of Trinidad and Tobago bonds. So this portfolio is pretty much split 45-50, 5 across our local equity, our fixed income, and similar to the US side, your cash components, if it is you want to have cash, liquidity cash, if you want to do anything in particular. So again, most important in this instance you're looking at is the yield on the dividend side, the yield on the bond side in particular. So I'll ask KTY, Catherine, to jump in now to mention some of the fees and benefits of remittance.
So before I jump all over Catherine and steal her thunder, what I wanted to say is whilst we may have shown you both moderate and aggressive portfolios, we have a very consultative approach to building portfolios. So we sit with you all and we go through a 8-step process that identifies where you sit in the spectrum of risk, either as a conservative, moderate, or aggressive. And then there's ultra aggressive that we also cater for. After that is done, then it is we make recommendations for the portfolio. But I know we can't finish this conversation unless we speak to what's the cost, right? So this is where the
Okay, so the fees range from maybe 1% to 1.75% of the value of your assets. However, it's negotiable depending on size of your portfolio. I know that you're gonna have this presentation, to keep, but I just wanted to more or less kind of recap on some of the positive and compelling attributes of our service and why invest with GAM, why choose us? And I think basically not only are we part of a strong brand in terms of part of the Guardian Group, which, has that we leverage off of, has a strong track record. We've been doing this business for now over 22 years. I think what is important is the human element, and that's what I like to always summarize and recap on, because I think that, to me, that is the most important part. I've been in the business for now with the same company for 15 years. And one thing I think that sets us aside is the fact that you get a dedicated wealth manager. So you have Brian, for instance, who is constantly on the ball and on top of your portfolio. He's always in tune with the market. Like I say, I have all these apps on my phone that gives me daily reminders of what's going on in the world. And I think this is applicable to managing people's monies. And in terms of, so you have this dedicated wealth manager who you can call at any point in time to get an update on your portfolio. I also want to let you know too, clients call me first. They have monies at the different, financial institutions. And I find it strange, well, I don't want to say I would find it strange, but they call me first and they ask me, Catherine, what do you think I should do? I'm trying to buy a house, I'm trying to, and I say, well, have you spoken to your other wealth managers, the other financial? No, I want to speak to you first. Because, for instance, today I had a meeting with a client and I said to the client, I don't want to just offer you all these different securities without getting to understand who you are and to see the bigger picture of where all your assets are. And then I give them advice. So I think that is very important with GAM. That's one thing that sets us aside. Also, having that dedicated wealth manager, what that dedicated wealth manager does is you're there to meet with him on a quarterly basis. So there's a quarterly checkup, rebalancing of the portfolio. So it's not like you're out of tune. You will be in tune. And another thing too, with regards to that is, we manage your portfolio. We have international access. We go off to, work with international brokers, but we don't send off the portfolios there and then you don't hear from them anymore. It's managed locally. So we do work with international brokers, but we manage it here locally. That's important. And then I guess the last thing is that we customize the portfolio to fit your needs. Another point I'd like to mention is our knowledgeable investment team. As Emil mentioned, a lot of them are CFA designated professionals and highly skilled, highly trained. We actually have one member, he's not here with us, but he actually is one of the very few in the country that structures products to allow people to have access to US using TT. And it's a product that we have that a lot of people are actually calling us for, but we just don't have the capacity to provide to everyone because it's limited amount. But he did design that, and I know for sure that a lot of people are not, other institutions are not really doing that right now. I know he's one of the few. So another thing I want to mention too is a lot of individuals have passed through GAM and now are in other senior roles in other organizations. So they have, come to our organization, gotten a lot of experience and.
Yeah, just a quick question. Normally, a lot of the accessibility is important. Sometimes you get in these vehicles and so on, especially like a big reputable company, and then you feel like as if you're disconnected from your portfolio a little bit, right? And I guess that's what you're alluding to.
That's
you'll
not exactly
you'll
what I'm
focus on
alluding
that as well,
Yeah.
right? With respect to the USD and the TT, is there like a minimum buy-in for one of these vehicles, or is it a invest as you go, or is there a minimum fund that you'll recommend to get started with? something like that?
Sure, well, with the portfolios that Ryan mentioned, it's $1 million TT. There's a start, but we do start like about 500,000. You can start with a low amount and build up.
And the US?
Well, it would be the equivalent, let's just say maybe 100,000 US.
Okay.
JP, that US asset that settles in TT dollars. It's when it is the assets become available.
Okay.
So we would buy a US asset that is more often than not blue chip and sell it to the market where it's settled in TT. So that is not like a fund. It's something that is designed and customized specifically for certain types of clients. So
Oh, you were referring to
yes,
that?
it's the TT
Is that one?
Yeah,
Yeah.
talking about the investment vehicle they're talking about here, like, is there a buying price, a
Well, we-
minimum
We
price?
showed you the discretionary one, which is the portfolios that we manage, but there's also, another side of the business where, you could be actively involved and active traders and, so.
No, I don't want to be actively involved, but you want to be, I mean, yeah, it's non-discretionary, but there are some people with the appetite where they kind of want to know what's going on.
Of
Especially with what you just discussed, which, I mean, I'm interested in, is like, we follow our industry.
Yes.
We know the shipping companies
Yes.
that move in. And I would like to have a direct conversation
Right,
with,
so-
I know Costco's going up this week. Let's
Yes.
get on that, you know what I
So
mean?
we have clients who have like a large portfolio with the discretion and they may open a smaller account for non-discretionary that they can, be actively in trade, try a little,
So we do have the option, right? Let's say approximately 30,000 US or equivalent.
Okay.
Yeah, like 150,000 TT
That's what I
dollars.
was trying to get at.
Right,
Like a
sorry,
five
yes, you
figure.
could start with 150,000 TT dollars, so.
Or you can call and say, looking at the stock in particular, it's short.
And you'll tell me if it's a good time or not.
So we look at the price points, I will tell you if it's hold up or not. Because you might be buying at the top.
Yeah,
Even though you know what's going on in the industry, the markets,
Of
versus
course.
what happens in the industry is two completely different things.
Yeah.
So you might be buying at the top and I'll tell you, hold up a bit, let's see if it pull back, probably by 5-10%. I then have a conversation with Stephanie and the rest of my trading team to decide what might be a better price point for you to get in on that stock to position your portfolio. And then you have access to the portfolio, your portfolios 24/7 through, so anybody that has a Guardian, life insurance, health insurance, or anything like that,
You can log online,
you can log
access to.
on that same app that you have for your insurance policies.
Another good one, sorry.
What they say is that even though I do not US dollars, can come to you in TT and still invest in US.
That was just the product that I was trying to describe.
Yes,
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 yes.
that's one specific product that we designed to allow people to have access to US. It was limited capacity, limited availability, but yes, we do have that from time to time. That's not always available. Not always the case, not always available. But I was just trying to show the creativity, the ingenuity of our team and our staff.
You want to be more flexible in the asset market.
Access in US.
No problem.
Yes, we know that.
So, but.
We do.
So far, always, all people that invest in US market for the.
Of course.
So I would assume that you should be able to,
Yeah.
cover it and. That's not easy to.
Not always, as because of the scarcity of the.
And if you have multiple portfolios and your fees are across one or more portfolios, do you have transaction fees if you're buying and selling on a more regular basis, or is it just on a quarterly?
Right, so.
So the fee structure that I described just now was for discretionary portfolios, the portfolios that we manage in-house. But there are other types of portfolios. So for instance, if you wanted to buy equities, US equities with Interactive Brokers, it's a transactional cost. Yeah, yeah.
Yes.
Yes, correct. It's just based on transaction.
Is it based on a full year, or you can charge quarterly, quarterly?
Yeah.
We did on a quarterly charge quarterly.
Yeah.
I'm also charging TT dollars.
TT dollars too, we don't charge you. Yeah, we can charge you in TT dollars. So yeah, we give you the option to pay in TT. Yeah.
What is your onboard process like, how easy it is to sign up,
Very simple. 2 forms of ID, a utility bill and proof of income. That's for individuals.
Something that we could set up where they'll come a day and we get that done.
Yes.
rather than-
Yeah.
But it's the most elusive group you'll meet. I mean, after today, that's it, you know, that's it. You know, that's it.
We don't see each other.
Minimum buying TT.
150.
150, yeah. But we talk, that's talking the NDS, but for DSI, from managed portfolio, right? The managed portfolio that Brian was referencing here. I will just say, it's supposed to be $1 million, but we've started with like 500,000 TT. 500,000 TT, no, we started with lower.
So,
What it is.
I'm gonna be taking body parts.
These are 2 persons of a team of 10 wealth managers, investment advisors. So there is, we spend a lot of time making sure we get the right people on the bus. And there's a lot of one-to-one interaction, communication, direct contact. We're actually looking at probably onboarding 2 additional wealth managers, probably within the second quarter of next year. But the points of contact here, Caption has a team of 3. Ryan, and there's another very skillful wealth manager. These will be the persons you're going to interact with. And well, I'm always right.
And I also want to mention that it's a full service asset management company in the sense that we have products to fit everyone's needs, basically. That's, so for instance, we didn't touch on this here, but there's also a small segment for ultra aggressive, for clients who are very aggressive. We can find alternative investments abroad in private equity and, different types of funds. I'm just saying that. And then you have, for the conservative ones too, because I don't want people to think we've forgotten the conservative. So it's a full spectrum, and that's, a positive attribute of the service and being part of GAM.
It would also be remiss of us, the fees maybe 1% now to probably 175. But it would be remiss of us to start this relationship knowing that we're going to be increasing fees kind of like probably 1st of November. So really and truly, the discretionary fees start at 125 as of 1st of November, and it goes up to, the ceiling is still the same, 1.75%. So just for full transparency, for that needed to be said here as well. Sure.
Can you share your returns for the last 5-10 years for the TP shop and the restaurant?
So let me tell you how it is we do that.
Yeah.
When we sit with you and we work on what your risk profile is, we would benchmark it to that. It's be relative to what your risk profile is. Because there are 3 different or numerous different risk profiles. We build a portfolio, and a portfolio similar to what is built, we would give you the returns from 3, 5, 10 years. What I'm saying is a 10-year weighted average return or a 10-year average annualized return for an aggressive person may be different from somebody conservative. So on the conservative side, what we find is a gross portfolio yield or return somewhere in the vicinity of about 4.5 to 5%.
Okay, so can I speak? Because I do quarterly reviews and so do Brian with our clients, I'm very in tune with what the returns are. So I don't have the total 10-year, but I could tell you for, when I'm doing reviews, I would say like a conservative portfolio could be anywhere from 4 to about 7%. A moderate will be 7 to 10, and right now aggressives are you can get over 10% with an aggressive portfolio. That is a mixed portfolio. So TT and US in one. US portfolios can do much better because you have the US equity markets. That element.
Would have been on the TT side.
So you see 4 to 7, conservative 7 to 10, moderate, and 10 plus aggressive.
But it's nuanced.
You have to remember also that not everybody's portfolio is going to be the same.
Yeah.
So
But they thought that.
Possible stock is set in this portfolio, you might want news or CGA, whichever one. Those share prices will move differently. So if it is you want to look at it over a 10-year period and say, how the shares perform, JB portfolio may have done better because Costco did better in share price movement than CGA, but it's different. So no portfolio is really.
You guys determine which companies you want to invest in. Is that a special that you have people people
We could let Stephanie address those questions. She's our investments person.
And that is done through in-house research and also research from external sources. So what we can
Yeah.
Oh. Sorry. Were they hearing me?
Yeah. Sure, yeah. Yeah, so let me stand because I'm a bit vertically.
I know. We have a problem like that in GAM.
Yeah, so
Okay, come here.
so basically we have our outlooks for different asset classes. And this is done through in-house research at GAM, through our investment and research team. And also through external sources. We also have external relationships with big banks and research houses. And we also utilize their research in our so we basically look at the market, look at the current themes in the market. Right now, we have a lot of things going on. We have US elections, we have interest rate cuts, we have China, we have all these things going on, and we basically are skilled in spotting opportunities. And that is how we look at choosing what stocks to go in. So right now there's a big, I'm just giving one example, right? There's a big push towards AI, artificial intelligence. So we look at companies within that space that could benefit the most from that push. And we invest in those companies. And once those companies fit a certain risk profile, like let's say they would go to more of a moderate or aggressive risk profile, then we could invest, you know, a portion of your portfolio. And we benchmark that against the US, I'm just saying, let's say a stock like NVIDIA. NVIDIA takes up about 5 to 6% of the S&P 500. So we'd also benchmark that against your portfolio. And that's how we choose. That's just an example of how we choose investments. Yeah.
So do you guys have any more questions?
Or more so persons from the online.
Yes.
Anybody online have any questions?
Well, the assets are held in Guardian, yeah. So, but you still have to do, I mean, and you're still responsible for your own tax, you know, do your tax return and all that. Now, the equities, dividends are paid net of taxes, interest on the bonds are paid in total. You don't hold it, taxes are not withheld from interest on bonds, but only on the dividends from the US equities. So when we get dividends in, it's withheld, you know, we get it net of the taxes already. And because there's a tax treaty between Trinidad and Tobago, you know. No. He's talking about if you're American citizen, you have to do your own taxes.
So you have US in this year, almost like you're gonna be filling out a W-8 or W-9 then for.
Correct.
And you disclose what your taxes are, and you get, yeah. Right. Well, yeah, I wanna say thank you very much. Did we get any other, questions from the online audience?
No, we didn't. What I do want is, just saying that we would like, if we can give us our presentation, we will be putting it up on our website in a very controlled area.
Definitely. We would share this afterwards. We'd send it.
What we're trying to do today is, during the day, we will get little groups, little pockets of persons, anybody interested. Sure. And what we'll try and do, if we have too much questions we can answer, we'll probably ask for a follow-up with a smaller group.
That's not a problem at all.
All right?
Right.
But we just want to say thank you very much for taking the time today, coming out, showing us your products. I think it was well received. Again, just thank you very much. And if you allow us, we have a small token.
Oh, thank you for having us.
Hey, Diamond, token.
You have tokens for the guys
no
too?
Problem. Do you have a question?
Well, nobody asked, but who owns the Guardian Group?
Who owns the Guardian Group?
Yeah.
The Guardian Group is a listed company, so it's public. So you have 61% ownership by a company called Portland, and the other 39% is owned by persons across straight across the the region. Other
Okay.
question.
So that would be Portland, Barbados?
No, it's Portland, is NCB Financial Holdings is actually the parent company, not
Okay.
Portland.
Okay,
NCB
because
Financial Holdings.
I
ask the question.
remember reading
Ask
an
the question.
article.
Yeah, ask the question.
I remember reading an article about Portland.
Right.
And a default on interest payments on a
Right.
bond.
Right.
From Mr. Leachin.
Yes.
Who is the major shareholder.
Yes.
As I understand it. And I became very concerned.
Right.
You know, so I didn't follow it all the
let's-
way through.
So
I don't know what the eventual outcome was. But if I was to invest in the company, I want to be rest assured
Right.
that, you know, that matter is no longer on the table.
So let's think through it, right? So when somebody owns a company privately, I think different laws and regulations govern that relationship. You'll agree with me on that, right? So NCB Financial Group Holdings is the ultimate owner of the 61 or 62% shares of Guardian Holdings of Trinidad and Tobago. NCB Financial Holdings Group, regulated by the SEC and also listed on the Jamaican Stock Exchange. There are certain rules and regulations that govern movement of funds, activity. There's a whole governance, corporate governance infrastructure in place that has to be satisfied by the SEC for you to continue to trade, right? Guardian Holdings, listed on Trinidad and Tobago Stock Exchange. We are regulated by the SEC, regulated by the central bank, listed on the Trinidad and Tobago Stock Exchange. So there is filing requirement and regulations, stipulations, also by the Trinidad and Tobago SC. There's an infrastructure in place. There's a governance in place that protects what it is I think you may be concerned of, right? The real question is, can Michael Leachin take his hand and dip it in the coffers of GHL, take the money and run? That's what you're really asking me. That's what you're asking, right? So I'm saying with all those, I would like to say with all those top gaps in place, with all that regulation that he has to get around, I do not think it's really much of a concern. Furthermore, our mutual funds are governed by a trust deed, which means those funds are ring fenced. So if it is, God forbid, something goes south, your funds are protected. So I hope I answered the question. Right, so thank you everyone. Thank you.
But let's not have all of you come on. Take a small break. And then we can look at
Yeah, but we just be high. Right, we put out more money and then we cut that out. Multitask ka, boy.
And then you give us this. Yeah, take it out there. Upstairs.
So that's joint share screen. Oh, I know.
Guys. Might be eating us up, but in the essence of time, you'll feel what you're representing. You're really listening. Yeah. No, I can't put a spanish eating.
Mike Woods. Okay.
Okay, this one. Right, so this one is for the audio, but this is for online people. Okay, so this is, yeah, so basically this is the one you'll be, okay, so I'll switch the slides for you. Okay, sure. Okay. Good afternoon, everyone. Good afternoon. Hello? Yeah, sorry. Good afternoon. My name is Christopher from Republic Wealth Management, and thank you for taking the time to sit down, have lunch with us, and hear us out on what we have to offer to you today, right? So
Who we are. So Republic Wealth Management, fairly new. We've been established about 10 years now. We have been formed part of out of our group, Republic Trust and Asset Management, who's been around for 75 years, almost as long as you guys have been. You're around 85 years now? 85 years now, right? So we are a fully owned subsidiary of Republic Financial Holdings Limited, right? All right. So what do we do? Republic Wealth Management Limited, we are an investment management company. We also handle private wealth management. We manage large organizations. We are accustomed to managing large funds. We service pension plans, individual clients now, we've expanded, and a suite of proprietary funds such as the money market fund that we have. So that's what we do, we manage those funds. We offer also wealth management solutions to individual clients through understanding what your individual needs are, as well as through accumulation, which is essentially picking out assets, and also to preserve what you have. If it is that you prefer to manage your own assets, we also offer brokerage services, which is you already know what you guys want, then we could arrange to have those funds purchased for you on your behalf.
So let me just interject there for a minute. So again, I am Brad Tomeu. I handle or manage the private wealth department in Republic Wealth Management. Right now, I'm managing about $1.2 billion in assets under management. What I do for my clients or my prospective clients, basically, I sit down with each person and customize a specific portfolio depending on your risk tolerance level. So everybody, I sit down, we go through how much money they want to invest, what they want to get involved in. Most of my customers right now, they want to preserve the capital that they work so hard for. So again, it all depends on their clients. So some clients can be risk averse, some clients can be conservative, moderate, they can be aggressive. It all depends. Once I find out what that is, then we can structure something, a portfolio until you're happy. So what we do basically for a conservative portfolio is somebody who wants to get a fixed income. It can be TT dollars, it can be US dollars, I do euros, I do pounds, Canadian, all hard currencies. We invested in the market because we have sound investment and advisory brokerage companies that we work with throughout the United States of America, as well as in Europe. So that is another benefit. So upon proposing a proposal for a specific client, we work with this client until they're very comfortable with what they want and the desired results. Some of them are individuals, some of them are families. They have a lot of succession planning because a lot of them have their own businesses as well too. Right? So this is basically what I do for my high net worth clients and my ultra high net worth clients. So that's a little bit what I do. So they can continue.
Sure, thanks. That's bad. Yeah, and we also handle trust and estate planning, as Brad was saying. So just to get an idea as to the process, as Brad was reiterating, first step is we try to understand your goals. We meet, we sit down, we establish where you are in life, what goals you have set out, and how we're going to plan to meet those goals. Next is, again, creating a plan. After our initial meeting, we would put, based on the inputs that you provided, we find assets that you would meet those goals. And we sit down, we establish what assets we're looking at, and we design that portfolio accordingly. So for example, if you have set milestones, you have a child who's young right now would need funds for university at a certain age, 10, 15 years from now, we establish the fund so that funds mature as needed to meet those goals so that the funds are ready when you're ready, right? And then partially, we try and stay on course. So life happens, goals change, we have new baby on the way, or things like that happening. the plan would adapt accordingly. So we review periodically to make sure that things are on track to meet your goals when you need it. All right. So to get an idea, it's a sample of what we'll be looking at. So for example, your local portfolio, mostly we could look at employing it into the combination of government guaranteed and corporate bonds. And bonds are mostly fixed income. I guess you would have heard it from a lot of people today. They provide a relatively high yield compared to what you'll get in a regular fund. And it will supplement your annual income. Also, I haven't listed here, but we're also available through our brokerage services to invest in the local stock market if you're a bit more aggressive on what's higher dividend yields. Right? Your foreign portfolio will be a little more diverse because the US markets have a lot more variety and options available there. So an example, your funds could be deployed in a mix of electronically traded funds, ETFs, individual stocks, government and corporate bonds. So you can invest pretty much almost anywhere in the world. And we're looking at, if you're now getting into the US stock markets also, ETFs are the way to go. They're based on a variety of stocks, and there are multiple ETFs we could choose from based on your individual needs. As Brad was indicating, your portfolio will be unique to you based on your restaurant, your needs, your milestone requirements, and your personal preferences. And so to get an idea as to what we offer, again, reiterated, we have provided local access to the local bond markets for your TT funds. And the yields generally are very much more attractive than what's, again, through regular investment to the bank and other and through your regular savings and other funds like that.
How was your fund operating now? Successful?
Right. So right now we are not here to market an individual particular fund because again, everything is tailor-made to a client. So in terms of fixed income, those incomes are literally fixed. You are getting this amount in yield. So that does not change. It's not like the fund goes up or down. So it's fixed income. So a portfolio, for example, could have a fixed coupon, which is a bond paying, in some instances, let's say 5%.
So the reason I can't remember. Some years ago, I invested some money in Republic Bank. I can't know which. And it's been losing money most.
Right.
This is TT funds or investment?
TT.
Global equity.
Is it Caribbean equity?
Caribbean equity. Yeah, I have it.
Yeah, I mean.
I have it.
I'm not. No. So,
yeah.
So what happened with what has happened to media? Very good. I'm kind of skeptical now.
Sure. I'm the mind trying. This is
Everybody invested before, COVID, I lost some money. Yeah, but no way.
So, all right, so I am Quinna Roberts. I'm the investment manager and public wealth management. So part of my role is actually managing the funds such as the public Caribbean equity fund. So you are correct in saying the Caribbean equity fund has been on a downward trajectory. That's across the whole local stock market. So the Caribbean equity fund primarily focuses on the local stock market. We have some regional stocks in there and some US stocks also. So our goal right now is to kind of minimize that downward trend because across the market so far for this year, only 2 stocks are Antimacal and Prestige Holding. So when you're investing in an environment like that, it is difficult to avoid stock prices falling. I think what Christopher is speaking about here is something a bit different, is whereby you're getting direct access to fixed income securities. So you create your own portfolio. Instead of investing in a specific fund, you get to create your own quote-unquote fund.
Yeah, but when I would have invested, I would think I probably was given the same But not in a collective private, like it's, but obviously, there's the same kind of skill. If you invest, of course, you mean, you're projected. I mean, it's an investment, so.
Yeah, exactly.
You can go up if you go down.
I think that's what the Caribbean Equity Fund in particular, over the past 2 years, because it would have peaked in 2021. It ran up, I think, more than 16% in 2021. The overall domestic equity market was performing well then. Since then, there has been a big divergence between the fundamental values of stocks and the actual market price. So you have companies like Massey, President's Republic, churning out 10%, 15% increases in their profitability, and the stock price is moving in the opposite direction. So it is difficult right now for any fund in the Caribbean equity space to perform well. So, but we do expect, given as an equity fund over the next 5 to 7 years, because again, that depends on the investment horizon. Equities are longer term, so you might look at, for instance, different stock market trends. You'd see it. There's also this choppiness. That's in the short term, but as you expand and step back, you'll see that over a 10-year, 15, 20-year period, the same Caribbean equity fund have performed very well. So I do agree that right now there has been volatility in the Caribbean equity space. So now the fixed income is a bit different, whereby you don't have that volatility. You have what they call the fixed income. So as Christopher was saying, you have these fixed fund assets. So for instance, we offer government bonds, where you earn 5%, 6%, well, maybe around 4.5%, 5% across like.
Government don't offer bonds in the public anymore.
No, so
It's only through institutions.
there's a lot of exactly now through private placement. So we are able to access these bonds because we, from like on the pension plan side, we might invest 300, 400 million. So we would have better pricing, and then we could pass that on to the clients through the private wealth arm. Given that we do manage pension plans, the mutual funds, and we also offer the private wealth clients also. So through that, we're able to negotiate better pricing, which could then pass on to the clients. So in terms of what the local bond market is sort of kind of offering opportunities and access to right now to us.
Where do you draw the line as a sort of a highway, no? In the way you're pitching these services?
In terms of the minimum, I think right now our minimum is just $34,000 to open a brokerage account. In terms of actually purchasing bonds, right now the minimum will be around.
Not bonds, I mean, to open up our portfolio.
Now, our brokerage account, the minimum is, I think, 35,000. Yeah, it's easy. Yeah. We try to make it as accessible to the market as possible.
Other than this service, with respect to the investment and this investment vehicle, says the customizable based on your needs, right?
Right.
So I see you're providing financial advisory service. What's your onboarding like? It's like a 2-for-1 ID kind of thing, or like
One for my ID, utility bill,
right?
a pay slip, drop letter.
How we trying to design this session today? We'll have a couple of interested persons after, and we'll probably reach out for a follow-up on trying to get everybody to come and get everything done, right? Next thing, what you're prepared to touch on is your tax incentive saving plan.
That's
coming as well.
Yeah, that's coming as well.
Yeah.
No, sure, of course, no problem.
Yeah.
Right, so as you touched on, we offer personalized private financial advice. So in terms of that, for anybody here who would be interested, we could always reach out to us and
One of our consider, I mean, this is a customer basically, especially when you go with the branded bigger institutions, of course, your reputation is there. But sometimes you don't get that little disconnect where I can't get through to my portfolio manager. And
of course.
I don't really call back. And I mean, what is that experience for the, a client basically?
Well, I'll tell you, from the $1.2 billion that I manage, all my customers have my cell number. So I can be anywhere around the world, and I take a call.
Okay. But that's a lot of assurance that I'm sure a lot of guys interested in, because I know what you have in an institution where I couldn't even get onto somebody. I don't know if you know what's going up, going down, so you really want that personal sort of accessibility.
So Christopher is one of the financial advisors. We have another 5 big team. We have and the team is growing. Right, so you'll have access to everybody's cell number. Normally what we do to onboard clients, We just want what the IDs utility bill, then we go ahead and we prepare the documents for you. So this at the end, you come inside and you sign there, make it very easy and very simple.
What kind of fees you charge on your portfolio?
So on that practical portfolio, what I do is from 40 basis points, 0.4 to 1%. It all depends on the value of assets to be managed.
But it's competitive with like what's out there.
It's more competitive.
Right, why, you have 1 year.
That's something more competitive. Right. Cause I saw some of the videos I was walking outside, I was like, all right, I'm not taking it, my feet.
No, I mean, that's kind of like the real touch points for people.
Because that's part of my job, I have to see what the competition does outside. So I know how to plan.
So yeah, I mean, it is competitive, they get a little spectrum. And, but those are the kind of touch points we really wanna do, you know, and this our own knowledge, so that we can get more interested.
So another way, I could reiterate, I wanna read. All the big companies out there that wanna raise funds, they come to Republic Bank and say, Republic Bank, what do you think is, what you should price this asset at? They come to us, you know why? Because I put it first. We taking 200 million, we taking $500 million. And we believe, this is a little technical, the curve is this, we have to be about that a little bit high. So what we get better prices. Many times in the past, I like the competition. They bid assets at a discount. And I said, I sold to my asset at a part. I can make a little money too. Right? So that's it, that's one of the advantages. And also too, if you have over $3.5 million in assets, they can be mortgages, loans, anything. We can put it in private banking. And then you can get access now to loans, mortgages, credit cards, merchant services, and have your own businesses. You can throw a lot of products that we offer. So we have a one-stop shop. We can provide needs for everybody inside.
So again, on the ETFs, for example, the S&P 500 index has grown over 34% for the past 12 months. And if you had invested 5 years ago, it would have been 73% on your funds in an ETF. Now again, note in red. All right. So for example, if you had US funds and you would have invested in an ETF attached to the S&P 500, as the top 500 stocks in the US stock market. Just an example, we recently did an analysis. We looked at the returns that would have been provided if you had invested 12 months ago would have been roughly 34%. On that, you put 100,000, you would have gotten 34,000 in growth. Over 5 years, it would have grown 73%. Yeah, especially after COVID. The stock market went.
Just to add to what Chris was saying, so the ETF is like it's what they call an exchange traded fund. It's like a mutual fund traded on the stock exchange. So you're able to access the performance of the S&P 500, top 500 stocks in the US through this ETF. So what you're saying is that by purchasing this ETF, you'll have had access to a growth of 34% over a 1 year period. And over the past 5, 15, 20 years, that has shown to outperform most other assets as a class without having to actually dive into doing Apple or Meta or those nitty-gritty. By having access to just the broad index, they're able to still return 34 and 70% over short as well as longer term time periods.
This is not
What's the minimum time?
On the US, 5,000.
Okay, 2 questions now. If I want to know, for what it says, if I want to invest in, let's say that I'm sorry. If I want to invest in US, I don't have US. Can I invest in 6 years?
When it comes
I bought from the US.
Yeah. Must have the US.
Yeah, must have the investing.
Yes.
When you're just telling us about the spectrum. Forget to know.
No, well,
Okay, I just did
no, no,
that
no,
before.
no, that's a very good question, right?
I just did that to remind you.
Because Republic Bank, of course, you know, we do trade in US.
That's the US dollar, right?
Yeah, so we are competing, we have to, this little pool that we get from Central Bank. And now we are spread it thin like butter. So essentially, we have to manage who gets what, and there's so much demand that's.
I try to make transfer, that's all. Yeah, very good. How the bank works, and most financial institutions, it's on priority. Priority is three purposes. Thereafter, medical, school insurance.
Yeah.
Investment at a lower total cost. I want to be honest. The person who get majority of US are those customers who do trade purposes. Right? We are ready papers that it should get all money. Right?
Right, it's not good.
Yeah. Right? So a lot of these customers, you'll have to go to queue. Because in my business, I go for a lot of kind of plans, I want to get away from you. So the big brother, I'm going to sell my house, I'm going to buy another house, or if I do something like that, help me complete $5 million in use. I mean, to be honest, that's going to be an apartment process. It's going to be hard to do. Right? But I endeavor to try to get as much US as possible. I put them on a queue and we use the authority department on a daily basis of receiving. You see that people in the city, they have to make a transaction.
See that you bought it up.
Yeah.
It may not be put until immediate discussion. But from time to time, the bank against properties and stuff was foreclosures, et cetera, et cetera. Can you tell me stuff?
No. I'll be transparent with that. That is very privately confidential information. And what happens is a lot of those properties, you have to try to get, I know you're trying to get a bargain, right? Which, because.
It's business.
Right, I understand.
The bank wants to get it.
So here's my perspective. Customer A, it's a mortgage with me, Republic Bank. And it's a $5 million property, we need to get 25 year mortgage alone. After year 5 or 6, something, that's what happens, you can't pay this mortgage. Who's stopping the liability? Bank. Right? So, when you're looking at amortization schedule, a 30-year mortgage, then the first 15 years, the majority of that payment goes towards interest. Right? So therefore, the bank now has to try to recoup and try to, we don't sell property. So we have to go down and try to sell this property. But we have to try to get market values to repair all that.
So I didn't ask for the stuff. I didn't ask for the stuff. What I said is that if I understand your brief. You have a property now, money, you are going to get your money. You get your money.
So you have to buy this property.
No, I'm not asking for this stuff. I'm asking for this.
They can get asking for this stuff. All the basic companies are trying to do a forum this thing.
I can get.
You have so much companies in the market. I also I can send it to you. Maybe a day when I'm not sending it to you. Unless I'm probably going to get one. Where you want?
Right, just to reiterate.
Like maybe you want this stuff.
Right.
If you have X property, that's what you said, but this is my thing. I have this property here, it was owned by Paul. Paul is no longer pay rent, it's based on part of it. So it was 1 million. Is now, he's paid over half, let's say, 500,000.
Yeah.
So you are looking for 500,000.
Yeah, right.
So
your 500,000.
If you want that list, I could get you that list.
And I'm saying, okay, fine. I'm willing to give you the 500,000 plus interest.
So
everybody wins.
I could get you that list or something. So just give me an email and I'll email it to you.
I only list two.
Yeah, I could get, yeah. So I have a list right now. I will just have to reach out to my team to get an updated one, just to make sure that we haven't sold any that's on the list that I have. Right? No, it's a bidding process. So we don't have pricing as like, okay, it's a bidding process. So there's no, I don't think there's a cost to place a bid. So you place what's right. Why Republic Wealth Management? So as people have asked, that you might think we're too big, that we might lose any cracks. And that's the thing. Republic Wealth Management is a separate unit from Republic Bank Limited. We reap the benefits, but we have individuals geared and designed to provide this financial advice. So you have your own financial advisor that you can call upon when you need to be able to get through and be able to do any business with, right? So it's not, nobody will be blocking your calls or you can't get through to anybody. You have cell phone numbers you could call to get at a moment's notice. Please don't call at 2 o'clock in the morning. That's an emergency, right?
Market close anyway.
Yeah. Although I have had people call me at the emergency at 2 o'clock in the morning. So you get the benefit of the size and stability of Republic Financial Holdings Limited. We manage $30 billion. Well, Purnell manages $30 billion worth of assets. This is the man I want to talk to about where to invest and so on. You have access to securities-based lending. So you can have your cake and eat it too. So you invest your funds, the bank could utilize, you could utilize those funds as security for any lending that you may have. So if it is that you could borrow at 4%, but you could get a 5% return on your investment, it's a no-brainer, right? Instead of spending your money on it, take financing as well as have your investment put aside. We have a high level of confidentiality. So again, we are separate and apart as a unit from General Republic Bank Limited. Staff at Republic Bank Limited will not have access to any of our data. So your investment systems are private and strictly confidential, right? Again, you get a customized solution unique to you in that, going over it again, every investment profile portfolio is unique to that particular client, right? We also have connections with the largest markets in the world through external brokerages and so on when it comes to foreign investing as well. As Brad reiterated, US, Euro, Sterling, in any of the major currencies, right? We also have exclusive access to upcoming investments. Brad indicated bonds are not really sold to the public generally. It's go through brokerage houses. So we could then invite you, if you would like, if we know that issuance are coming out, you're the first in line to get access to those funds.
I would like to get out.
The what's coming out?
You want inside information.
Yeah.
But let's keep it rolling. We're running a little behind time.
Oh, we're running behind. Sorry. Again, Purnell has specialized knowledge in the local stock markets and so if you need market research and information that we would have, and you need investment advice on any individual stock on the local markets, we have teams of analysts that are very familiar with what we have locally, right? Also, so if you're forward thinking and looking for the future, we have succession planning. We have trust services, which handles trust deeds. And so if it is that in case you are no longer here or for anything in planning for the future, that is, right? Extras, tax deferred annuities, that is the TISP that we have. The TISP saves you have up to $60,000 annually that you could put towards a tax deferred annuity. In total, for you to get benefits of 25% tax deference on it. So it's an extra tax. That's the law that we have right now. That's government. That's not us.
That's different. from what-
The corporate, in the instance with corporates,
was-
the
no one.
organization, the company benefits from that, tax difference.
You have a corporate discussion.
We have a corporatist where they are. All right. We also have trust and estate planning. Again, we have a team of individuals who would be very familiar with setting up trusts and so on for, and wills and thereafter for succession, right? For individuals with investments over 3.5 million, loan, lending or investments, you have exclusive access to 5 private banking centers. So you'd bypass any line, nobody would ever see you in the bank. You go at a private unit to get your banking done. And those are located throughout Trinidad. We have them at Westmore, LSD, Val Park, Center City, Chagonas, and in and High Street, San Fernando. No, it's Gulf City, Gulf View, in San Fernando. We also have access to agent-free life insurance if it is through our Republic Life Insurance company that we recently established. You literally sign up online, no medical or anything required, right? And also lending for real estate investments. When people think they go into the bank for investments, they think they'll get commercial rates and all of that stuff. Not anymore. If it is that the lending is going to be based on your income, we would lend it based on the retail, regular, low rates for retail retail individuals wishing to purchase their first home. So, oh, no. So, yes. Yeah. So for private banking, you have to have 2.5 million invested in either lendings or in investments. So if you have that in your deposits. No.
And they have it in cash or mortgage. Even if you have mortgage and all, you can do it.
Yeah. Yeah, so it could be a combination. So it could be you owe in the bank 2 and you have 1.5 in savings, in investments.
Quick question, would we be able to get a copy of your presentation? We put it on our website in a very secure area, and that's okay?
Internal website.
Yeah.
Right, and well, contacts, this is my personal cell phone number. So if you scan it through WhatsApp, you get me directly, right? No.
So any questions? I was pretty comprehensive and well put together. What I would, as I mentioned earlier, so we intend to probably do a follow-up. So from the big capture, we'll try and get, the interested parties, and then we'll probably reach out for a follow-up session just so we can try and get on board with what services you're providing. I want to take the opportunity to say thank you very much for taking the time to present to us. Was there any questions anybody wanted to raise in particular?
I have a question on the ceiling with life insurance. With no medical, what would that ceiling be?
If I remember correctly, I believe it would just be 500.
500,000.
Hey, okay, so also we have a little token here.
Yeah, that's because we have regulations and what we have with
Not enough to make us move.
No.
I just want to say thank you very much. No, let's be honest with you, okay. So there's a little token here. All right. Thank you very much. We really appreciate, you're taking the time. We do hope to have some follow-up, and this is part of our wallet initiative where, we try to get everybody financially involved, aware of what we have. So we really hope that we drive some business out of this for you guys, right? So we really appreciate it.
Thank you.
Just but is that a way we are already on board with the
Yeah.
We have already on that.
So it's just for the guys to sign up for the accountant, and she'll take it from there. Right? So it's just to go to Nicole and tell her. All right.
She liaises with whoever from Republic and Rich Fire. So
I'll be me.
not just the 60,000, it's the open limit of 130,000.
All right, so just if anybody interested in using Republic Bank as a vehicle, let's talk to Nicole with the tax deferral, which is the wealth management. Put your name down and who you're interested in, which party, and at the end we will collate all the little groups and probably try and find some follow-up sessions. All right, thank you very much, gentlemen. Appreciate it.
Thank you for your time.
All right, guys, I hope, and I just want you to just maintain the focus. Last session, last one, almost there. We are even gonna, but it's a break. Gonna have them coming shortly, and this one is not gonna be on wealth management, so it's gonna be a change of discussion and topic. So at least it wouldn't be too boring. It's a different service being provided. And I think we beat this horse. I think we beat this horse a little bit. Coffee fresh. This is gonna be different. We're gonna offer some stuff. Alright. And you should, I can never believe it. Okay, this is okay. I mean, guys, welcome to the cars there. Oh, gentlemen, just to let y'all know that they have the vehicles outside to view. If anybody interested, they have 2 vehicles. Some agents brought over for us to view. No, they brought some Volvos. I have no idea who interested in driving that. Okay. I don't know who would want to drive that. Yeah, they live in it now.
Yeah. Yeah. I don't want to share. Of course. Not doing yams, right? Not yet. Yeah, feeling right? Yeah, send it to me. And you're the share. That's beautiful. Yeah, that's beautiful.
So on the website?
Yes, for about 5 minutes. Well, take a departure break and they'll come back, right?
Yes, sir. That's
So requests of these items. I'm following up with this question. So I'm not getting alright. Okay, so I think it's yeah.
Sure. Yeah. Something different.
Okay, so it's that's living on credit card. Credit card.
Yeah.